All right, guys. So today is inflation data day. It is also the FOMC meeting, man. I can't talk right now. Today is CPI inflation data. We also have the FOMC meeting later on this afternoon. It's a very, very busy day. It's one of the most volatile days in markets, and yeah, we're here for it. We'll see if we can get some good action today. I'm gonna go grab my coffee, but yeah, it's a ridiculously large day today, Chad. A huge day. Yeah. Hopefully you guys are ready for it. GameStop actually gapped up a little bit too, so that's interesting to see. Here's the SPY on the right side. SPY broke highs again yesterday. Nvidia is still sitting at 121s. Did I make money yesterday? It looks like the market did well. GameStop is up too. Yeah, I did make money yesterday. Wow. Okay. Yeah. All right, yeah, today is FOMC day, chat. What are your predictions? Expectations are 0.1% month over month for regular CPI, and I think they are they're 3.4% year over year, I believe, is what they are. So yeah, 3.4% year over year and 0.1% for core for regular. Core is 0.3% expected at 3.5% year over year. So a little bit higher expectations for core, but regular is expected to come in lower than last time and lower than expected. So that's typically good. It is expected at 0.1% month over month and 3.4% year over year. Do we come in? Subscribe. There we go. All right. I'm gonna have to go grab my coffee in a second, chat. But yeah, let me know what you guys are thinking right now, man. It's again, it's one of the biggest days in markets. What's up, Emmanuel? Rally with CPI, then tank after the Fed resistance. Yeah, maybe. Yeah, let me get some music up. Yeah, I'm ready, Chad. Did I monetize? I did. Okay, good. I'm going to have to go get myself some coffee here, guys. I'll be right back. It might take me like a minute. I'll be right back, chat. So give me a second. All right. All right, guys. It is CPI day. I'm ready. Yeah, so the expectations for the Fed meeting are that almost certainly going to pause rates. Like, you got some people throwing out cut expectations. I feel like that's what they want to happen, not what they actually, not what they actually think is going to happen. I feel like that's just what they want to happen. And so I'm expecting a pause today. I think you should as well. Almost nobody is like, the likelihood that we're going to cut rates today is very, very low. It's not zero. So it's still possible we cut rates. It's just super unlikely, So yeah. Again, y'all slap that like button, hit the subscribe button. I appreciate it. I think y'all be proud of me. I ran some Oracle 127 calls expiring. Didn't Oracle drop? I didn't see what they showed. They gapped up nicely. So yeah, Oracle did well for their earnings. I'm not in Oracle specifically, but it's up. Intel is actually green finally, man. It took me a while. Walgreens. Yeah, nice. All right, y'all can hear the music correct. You should be able to. All right, so I think, yeah, I think y'all should be good. All right, chat. Again, CPI inflation data today. We'll see what we get. Let me drink my coffee. All right. The CPI coming higher. Seeing a few economists saying in order for the Fed to hit their 2% target, a rate hike will have to occur. Yeah, but they're never going to hit their 2% target. That's like ideal, but they're just not going to hit that. I don't even think they expect to necessarily hit that. Not anytime soon, at least. We don't need a rate hike to hit it, though. It's going to take time, you know. Even with a rate hike, like there's a lagging effect to that, so it's going to take a year plus for any rate hike to have an effect on the market, or the economy, I should say. So even with a rate hike, it's not going to happen anytime soon. Canadian here, what's the two datas coming out today? One at around 8 a.m. rate cuts and 2 p.m. inflation thing. Can someone explain what it is? So you got it backwards, Justin. So today at 8:30 Eastern Standard Time, we have the most important inflation metric for the U.S. economy today. It's called Consumer Price Index. It's the biggest, most watched, especially by retail, inflation metric. It's abbreviated to CPI, Consumer Price Index CPI. That drops this morning at 8:30 Eastern Standard Time. Very big influence over markets, will move markets, will influence markets. Again, that's expected at 8:30. It's expected for regular CPI month over month. There's two major readings for this report. The first one is month over month. The second one is year over year. So for the month-to-month inflation increase, they're only expecting 0.1%, which is good, right? Like that's pretty low. Last time they showed up at 0.3% gain month-to-month in inflation and prices. So this time they're only expecting a 0.1% increase, so that's good. We also have year-over-year inflation data. So year-over-year CPI, which is how much they're expecting inflation to rise on the year. 3.4% is what's expected there. So right around 3.5% is where we're sitting for in regards to inflation. And there's also core, which excludes food and energy. All that stuff drops 8:30 today Eastern Standard Time. And then we got the FOMC decision today. So the Federal Open Market Committee, basically the Federal Reserve is what this is. The Federal Reserve interest rate decision. You know, the Fed will influence interest rates to try to balance the economy. If the economy's too strong and the labor market's too strong and inflation is a big risk and issue, they will keep interest rates high like they have been doing lately, because they're keeping interest rates high, trying to discourage spending, trying to push down the economy. Like that's what they're doing when they're keeping interest rates high. They're doing this because inflation has spiked, and if you discourage spending through high interest rates, less people are going to spend. And so, you know, it's going to make interest rates, in theory, go down. And so lately they've been doing that. They've been keeping interest rates high. It's called a hawkish Fed, a contractionary monetary policy Fed, where they're trying to keep interest rates high, discourage spending. That's why, like, whenever we have like weaker jobs data, you got some people who are like, oh, it's the end of the world. It's like, bro, that is what the Fed is trying to do. Not the end of the world, but the Fed is trying to discourage spending. And then you have the other side of that, where if you bring interest rates down, like if you cut rates and bring interest rates down, it stimulates spending, because the less money people are spending on a mortgage or auto loan or lending in general, the more they tend to spend. And so by bringing interest rates down, it stimulates spending, you know. But that's not what we need right now, because, again, prices have gone up a ton over the last 5 years. We can't really handle more price spikes. And so right now it's the Fed's job to keep prices under control. And so they've been keeping interest rates high. And in that regard, today's CPI report is very, very relevant to markets. It's very important. We got to see what inflation is doing to see what the Fed might do. And then the Fed makes their interest rate decision later on today at 2 p.m. They're almost certainly going to pause rates. They're almost certainly not going to raise. They're not going to cut. They're going to pause rates. You can see the probabilities here at something called the CME Watch Tool. If you type in CME Watch Tool in Google, this website will pop up. It'll tell you the probabilities. Right now, 99.4% of people are expecting a pause, no rate change. 0.6% expecting a 25 basis point cut. But that's probably not going to happen. I don't know, like you see these guys that post about the FOMC meeting and CPI, and they always tell people the market's going to crash, and they're doing it again. I don't know if they're just trying to get views or like what it is, but I don't know how many times they've said the market was going to crash from this, and then it hasn't. Maybe the market dips. It's certainly possible the market pulls back, but I don't know. I don't think telling people the market's going to crash every CPI or every FOMC meeting is a good move. If you track the CPI reports or the FOMC reports, the market does not crash during these reports. Every report at least. Sometimes it pulls back heavily. Sometimes it rips up heavily. The big thing to understand about this report is that it causes volatility. So it doesn't necessarily have to be one way or the other. It just causes volatility. It can move the market up big or down big. But yeah, that's kind of the nature of this report. Crypto market reactions, I'm not sure. I don't know if you should sell the news. I don't know what's going to happen in this report. Nobody does. You got to make that your own assessment there, I think. Nvidia to 125 today, maybe. All right, chat. All right, I'm going to drink my coffee. GameStop, it did rip up yesterday. We'll see if GameStop can make another run. All right. All right, chat. AMC moving up to, yeah, AMC over $5 as well. So what's driving? Let me use my AI news release. All right, so we're gonna take out. See, this thing is wrong. Yeah, so the problem AI gets wrong, it gets the date wrong most of the time. You know, that's weird. All right, guys. Well, hey, we already got 300 people here, so hey, what's up, Keen? I don't play this kind of days in the market at open. Yeah, it's a risky day. I'm gonna go with choppy neutral activity today leading into this. Well, yeah, of course it would be fun to see a negative CPI inflation. Everybody would love that. Market would fly. I mean, John, you are a legend. Thank you, Jonathan. I appreciate you, brother. Thank you, man. Could we see stock dips on CPI news? Yeah, we could. I mean, anything could happen. I would just be careful. Everybody telling you the market's going to crash. Again, I see people that do this every major economic report. Every major economic report, they say the market's going to crash, guys. And then it doesn't. And then they're sitting there like, well, it would have crashed, but manipulation, you know? And it's like, okay, so you're telling me the market should crash every CPI report, but it doesn't because of manipulation. I get it. That might be music to some people's ears, but it's not a reasonable expectation. Like, that's just pandering, for lack of a better word. Can we see stocks dip on CPI news? Yeah. Yeah, I'm not going to talk about that at all. Global stock market. Gold. Where's gold at? Oracle ripped up on good earnings yesterday. All right. All right, guys. So Apple stock soared 7% following the company's AI-focused announcement at its WWDC. So yeah, Apple up big, up to $200+ a share. The new AI capabilities in the upcoming iPhone 16 are expected to drive big sales growth, positioning Apple to potentially surpass Microsoft as the world's largest company. You know, and it's crazy how much the sentiment changes. Like, just a couple weeks ago, people were acting like Apple was done for. And I was sitting here telling people, of course it was a healthy company. Like, I was sitting here telling people, again, Apple's one of my favorite investments because Apple's just so strong. I'm not going to bet against Apple. And again, the argument I always tell people is the same argument. Apple is very smart. They make it cool to be an Apple user. They make young people specifically, they make them want to be an Apple user. And once somebody starts using a phone, they very rarely switch to a different brand of phone. And so young people want to fit in. They do things with group chat. If you're on an Android, they make you a different color, and they do all these different things. And young people want to fit in. I could give my daughter the brand, like the newest Samsung phone, and she wouldn't take it. She would want an iPhone. She would take a 10-year-old iPhone over the newest Samsung. And so Apple's very smart with their branding, and they're one of the most successful companies in the world. It's not a shock that they're up over $200 a share now. So Apple's running. We also have the Fed meeting today. Again, a pause is almost certain to be what shows up today at 2 p.m. A pause. We're going to announce the decision here at 2 p.m. and then at 2:30 we're going to stream the full press conference live like we always do. That's a big report, a big day. That drops at 2:30. The press conference drops at 2:30. Yeah, we'll see what happens. Analysts are expressing concerns that mega cap stocks, which have seen significant gains recently, might be overvalued and could face a correction. This has led to discussions about shifting focus towards value stocks, which may outperform in the near future, according to Business Insider and MarketBeat. Several major companies are reporting earnings today. Broadcom, Dollarama, SafeStore. Let me see. Are they today? Let me take a look. Must be this evening, huh? Yeah, so we got Broadcom, Dave & Buster's. I don't see any other ones. But yeah, we got Broadcom and Dave & Buster's. All right, guys. All right, team. Hey, thank you, Jonathan. What else we got? What do you guys expect today? Yeah, let's do a correction, small dip and a bit of chop today. Watch John go to work. I'll attack the chop for sure if it's there. I'll definitely attack the chop. I'm ready for Tesla to move back up. I'm in Tesla. Apple up big. Again, we'll see if it holds. I'm excited, man. Today's like the biggest day we do here at this channel. The biggest day we do, the biggest stream we do here is today. You know. All right, chats. Yeah, so here, I'm going to mute the music for a second. I'm going to mute everything for a second, so just give me a second. Okay, so I wanted to listen to this video that people were talking about. I unmuted it. Gold, what do you think? CPI comes in higher, market dips? Possibly. That might happen. How do you identify a good stop out place on something like GameStop? Well, I don't know, bro. Find a major support or resistance level you like, or you think it's a milestone level, and use that. All right. Let's see. We got about 400 people here live. The unemployment rate last week is too high. Maybe they will raise the interest rates. Yeah, I mean, I'm not sure if you really understand it, Sel. It's all good, it's all love, but if unemployment is too high, what they would, to control unemployment, they would lower interest rates if they want to help unemployment. Raising interest rates would make unemployment worse. It would make it higher. Why? Because when you raise interest rates, it discourages jobs and business because interest rates are high, right? By doing so, less people are going to work. It's going to do the opposite of contributing to more spending and more jobs. So essentially, the higher interest rates are what the Fed tries to do by keeping interest rates high, guys. So the Fed will keep interest rates high. The reason they do this is to push the economy down a little bit to try to get inflation under control. The only real way to get inflation under control is to push the economy down a little bit and discourage spending, discourage it. And so if inflation is rampant, what do? They bring interest rates up. They increase interest rates. They take a hawkish stance and they increase rates. They increase the federal funds rate. Sometimes they do what's called quantitative tightening, which is they just stop buying bonds and giving liquidity to those markets, and that makes banks keep interest rates high. But the point is, if they want unemployment to go down, they should cut rates, right? But I don't think that should happen. Unemployment was at 4%. It's not crazy high. And I think that we should keep interest rates high for as long as possible to really combat inflation before we start cutting rates personally. But that's just me. Possibly Curtis. I mean, that's possible. It is an election year and they are going to get pressure, from both sides to do different things. Yeah, all good. Am I still in AMD? I don't think so. No, I'm out of AMD. What happened to BNED? I don't know. Not a company I'm trying to miss. Is this Barnes and Noble? Barnes and Noble has a stock. Again, look, honestly, every time I go to Barnes and Noble, it's packed. Like, I might be single-handedly supporting Barnes and Noble here with the amount of books that we buy from there. Dude, I go to Barnes and Noble all the time and buy books. Honestly, the last time I was there, people were talking about stocks, like right next to me. And I had the urge to be like, hey, and they were young though. And so I just can't relate to young people anymore. I'm too old. They're going to look at me like, who is this old man? Should go in there, tell them I'm the top 3 greatest stock trader of all time. See what they say. Anyways, hey, we got 400 people here live. Yeah, well, Nvidia's the big chips. Yeah, what go up 6,000%? ARM. Yeah. I mean, ARM had a really good IPO. Yeah, my dad in Louisiana used to bring me to a place called Books A Million. It's called Books A Million. And I remember the smell of it, And so I like bookstores because of it. Honestly, though, I don't use that many books anymore. I don't even read books anymore. I don't need to. All right, not nonfiction books. Fiction's different. I'll read a little bit of that. But again, I showed people this the other day. Like, I'm going to give you guys an example of what I do now. So, and this is a really smart way. If you want a really smart way to digest information, okay, listen to what I'm about to say. This is a huge hack with AI, a powerful hack with AI, guys. This is legitimately powerful, okay? So just pay attention. Jim Cramer posting about GameStop again. Well, we'll go back to that in a second. But yeah, this is what I do. So I go to Barnes and Noble and I find books that I like. Right? I go to Barnes and Noble. I find books that I like. Right? We'll just use the compound effect. Right? We're gonna look up the compound effect. Okay. So this is a book. There's a book called The Compound Effect by Darren Hardy. Okay, watch. list the chapters of the compound effect by Darren Hardy. All right, now watch what I do here. List the chapters of the compound effect by Darren Hardy. My AI has been a little bit slow this morning. I'm not sure why mine is so slow. Dude, what is wrong with my AI this morning? I'm gonna have to use Chrome because I don't know if it's just GPT or what. Let me copy this. Let me open up a new window. Yeah, it's just slow, dude. I don't know if GPT 4.0 is down. Let me try it on I'm gonna try it on Chrome. Yeah, is GPT-4 down right now? Yeah, so mine is very slow, gens. Anyways, I'll tell you guys what I do anyway. I can't actually... Okay, look. Here's one that I did the other day. So I'm actually doing this, okay? So, like, I'll show you guys a background of what I do here and how I do this, okay? So like, look. I don't even say anything. I say next 5 moves book. Look it up. This is the next 5 moves book by... Who wrote this? By Patrick Bet-David. Okay, so I say, hey, look the next 5 moves up. It'll tell me where it structures the book, the 5 different segments of the book, right? The first one is Master Knowing Yourself. And so then I say, give me a large 400-word summary of the first chapter. Look at this summary. It gives me the full details of this book, what's in it. Self-assessment, the power of vision, setting ambitious goals, understanding value, overcoming beliefs, practical exercises, conclusions. And then I say, summarize. I want to know what the exercises were. So I said, summarize the exercises mentioned above. And so it gives me a full breakdown on all the different exercises in the book. SWOT analysis, vision board, goal setting, unique value proposition, overcoming limited beliefs. And so I digest the first chapter very quickly. And then I say, okay, break down chapter 2 in the same way. Same thing with chapter 2, all these different themes, ideas, so forth and so on. And I'll keep doing that and read the entire book, right? I'll keep doing that. I'll digest the entire book, the entire process, and everything like that very, very quickly, much faster than reading the book myself. And I don't actually have to pay for the book either, which is crazy. And so when I go to Barnes and Noble now, I don't ever buy the books. I don't need to. I literally just take pictures. My phone is filled with a bunch of pictures of the books I want to digest. And it doesn't take me days, or it doesn't take me a couple hours to read it either. Yeah. It's a powerful thing, man. It lets you digest data very fast. Apple giving a version of GPT-4 away for free. That'll obviously add traffic. Yeah, my GPT is down today. I don't know what's so slow with it, but it's very slow. Yeah, let me look at ChatGPT being done. ChatGPT down. Yeah, so we've had a lot of OpenAI down reports today. Yeah, so the discount ended, VG. So there's still a 50% discount if you use my coupon code BT. So you still get a 50% discount. I'm sure they're going to add one sometime soon. But yeah, for now it's down, which kind of sucks because it is the FOMC meeting and CPI day, you know. So I would hope they would, you know, do it better. Let me see. I don't think. Let me try using my link and coupon code and see what happens. Let me see about the 250K challenge. I'm pretty sure that one's not going anymore, but I'm going to try it out. Yeah, so it says a 50% discount is what they're offering now. Yeah, so I'm pretty sure it's only a 50% discount now. Yeah. I don't know. So you can get the 250K challenge for $90 right now. So it's definitely cheaper than, you know, it would be $517 a month, and 50% off of that would be like $208.50. So half of 517 is 208.50. But when I process it, it's only $90. So you can get the 250K challenge for only $90 right now. But I'm sure they're gonna update it soon. They're probably letting things calm a little bit since they. I'll ask my guy, but they're probably letting things calm a little bit since they've been. Yeah. They're probably trying to let things calm after all the glitches on Rhythmic. It sounds like 80% off. Yeah. I mean, I don't think it's for all of them. I tried to buy a different one. Honestly, they're all coming in at 90% for me. Like, look, I could try the 25K one. And see what happens. But yeah, guys, inflation day today. We got 500 people already. It was before 7 a.m. too. So it's a day today, guys. I'm excited, man. Today's gonna be a crazy busy day. We got the FOMC meeting. Yeah. So some of these. So the 250 one is 80% off. The rest of them are 50%. Yeah, they don't really have any updates. I already checked. Yeah, so you can check out the links in the description if you want. I'll reach out to them. I'm expecting a correction, but that might be too predictable. Yeah, I mean, a lot of people are expecting big pullbacks, crashes ahead of these meetings. Typically, that's not what happens. If we look back at every CPI report, this is a monthly report, right? So here's the SPY. SPY broke highs. I don't know if these are lifetime highs. Yeah, so here's lifetime highs on the SPY. So the S&P, the SPY breaking lifetime highs leading into this report at 8:30. Again, I'm probably going to attack choppy behavior. You know, so what I'm going to do today, most likely, is at 8:30 Eastern Standard Time, we get CPI inflation data. We'll have thousands of people here when this report drops. After that, I still think we're going to have choppiness leading into the FOMC decision. Unless inflation data is really polarized, like really good or really bad, I think we're going to have choppiness leading into the FOMC meeting. And so my plan is to attack choppiness leading into the FOMC meeting after CPI drops, as long as it's not too polarized of a view. So again, we'll see. Time will tell. Give me your expectations here. Yeah, I'm looking at promotion updates. I don't see any. $13,000 people in a poll, 76 people believe in a pause. Yeah, let me ask this question. Again, we got the stream here. I haven't done a poll yet, so we'll do it. Does CPI inflation come in higher or low? All right, so guys, so we said the CPI inflation data coming higher or lower than the 0.1% expected month over month. Vote on the poll. Let me know what you guys think. We got almost 100 likes already. We got 97. Yeah, so we just did a poll. CPI will be lower than expected and they'll cut rates in July. No. Not going to happen. We might have lower than expected CPI, but we're not going to cut rates in July, I don't think. Yeah. Can we predict CPI based on previous data? No. I mean, there was a time where I got 4 CPI reports in a row correct. And I would love to claim that it was some skill that allowed me to predict it accurately. I just got really freaking lucky. I just straight up guessed it correctly, like by pure luck. It's completely random. Not random, but you're not going to be able to guess it. The only way I was able to do it was I just used balance as my guess. So like if last time we come in high, the next time we come in low, and I used that and I got it right 4 times in a row. But eventually I was wrong, and I do think it was just a straight up guess. That was lucky. Yeah, September maybe we'll get a cut. Right now, if you look at the probabilities here of rate decisions. So if you look at the probabilities of rate decisions here, again, right now, 99.5% of people expecting a pause. In July, 91% of people expecting a pause. In September, so right now it's pivoted. September, we got 50% of people expecting a cut. So September is when it looks like, but still, even half of the people then are expecting a pause. And then we got 4.4% of people expecting a 50 basis point cut. So, interesting. No reason to lower rates. What if they're going to release CPI data 30 minutes early? No, man. Yeah, Powell speaks again. So today we got CPI inflation data at 8:30. After that, we'll probably get choppy behavior. And then at 2 p.m. Eastern Standard Time, we get the rate decision. So we get what the rate decision is by the Fed. Again, they're almost certainly going to pause rates. They're not going to raise. They're not going to cut. They're just going to pause. The more important thing, because we know we're probably going to pause rates today, the more important thing is what Powell says during the press conference, whether he's hawkish, dovish, whether he thinks that we're going to cut rates multiple times this year, or whether he thinks we're not going to cut rates at all, what his expectations are in regards to inflation, rate decisions, recession predictions, quantitative tightening decisions, if they slowed or ended QT, which we're going to hear after they do it, whether, the Fed is essentially hawkish or dovish is what the most important thing is going to be. And that's going to impact the markets the most during this press conference at 2:30 p.m. today. Right. If I'm right, take credit. If you're wrong, blame. Yep. That's my go-to. I know one thing. I know Powell will definitely say inflation remains elevated. We're going to take a data-dependent approach. Yeah. They're almost certainly going to say that. Higher CPI is bullish. No, higher CPI is high inflation. It's bearish. It's negative. People are going to react negatively to high inflation. Yeah, Powell repeats the same thing every time. That's how it goes, though. I mean, it is what it is. Sometimes I repeat myself, so, can't really knock them for it. Reward savers, not spenders. Well, it depends. Like, blindly saving without investing long term is a terrible idea. You're going to lose so much money. Like, imagine you don't invest in anything for 20 years. Like, by the time you might save up, whatever, 100K, but 100K is going to be so little of money in 20 years that it's not going to matter, right? If you're not investing and hedging your money against inflation, you're missing out on, you're losing money. Without question, losing money. It sounds like they'll maintain. Yeah, they're going to pause almost certainly today. I mean, listen, we could go outside of expectations. It's just less likely. Nothing's definitive, though. Anything could happen. And we did see the Bank of Canada as well as the ECB cut rates over the last week. And so anything could happen, but it's just less probable. It's just not super probable. Like, again, I've covered every major FOMC meeting and decision and press conference and Fed minutes report over the last few years, really. Not once have they gone outside of expectations in terms of the CME watch tool percentages. Not once have they gone outside expectations. But high inflation means dollar devalue assets up. That's why the stock market's up so much. Once rates start going down, watch out. Yeah, I mean, a lot of people are guessing that rate cuts are not going to help the market. But what I'm saying is that typically right now, everybody fears inflation. And so anything that contributes to more inflation is typically interpreted as a negative thing. Lately, right? Like it's to that point where people are confused. Like people are used to high GDP growth signaling bullish action in stock market and other markets. But over the past few years, unemployment, jobless claims coming in higher than expected cause positive reactions. GDP growth coming in higher than expected caused negative reactions. So economic growth metrics that came in better than expected showed negative market reactions because, again, the market fears inflation so much. And because of that, that's why the Fed's keeping interest rates high. That's why they're maintaining high interest rates. Look at NVIDIA's spike. This might be the iPhone news is what I'm assuming here. The iPhone news for Apple. Let's see. All right, so we did get mortgage rates show up at 7.02%. 7.02% for 30-year mortgage rates. Hey, Victor, my guy. Thanks, brother. Hold on, I'll get to that in a second. So yeah, here's NBA 30-year mortgage rates. What are your price targets for GameStop? What are your buy and sell zones? I mean, I'm not gonna sell unless it drops dramatically. I might buy more if we start to really get on a big run. But I've been in my positions now. I haven't sold any in a minute, so I'll probably just sit on my positions here. But yeah, I'm in GameStop right now. I don't really have any levels. I guess I would watch $25 a share. $25 a share. I think that's a big kind of like milestone psychological level. $30 obviously is a big spot that you probably want to pay attention to. Though remember, I'm not an investment professional. I have no idea what GameStop's going to do. I might be wildly wrong about anything and everything I say here. Not an investment professional. Remember, I might be terrible at this stuff and have no idea what I'm talking about. I do trade off stream. You're not going to see all my trades or anything like that. I'm not even claiming to be a good trader. So don't copy me. But yeah, with that said, I'm looking at like $30, $25, $20, as well as I think the level of $26 held, $28 seems to be some support. So major whole dollar levels is what I'd pay attention to, as well as if we start to break highs and get up there on GameStop, $50 is the big one. $50 is the previous resistance level as well. So what's your strategy, dude? ICT. So for day trading, ICT strategies are strategies that have been around well before ICT, right? So like these strategies involve trend breaks, stuff like that. Like those strategies have been around well before ICT, and ICT is great. I think ICT's got some cool content. I think great content. But I trade range breaks. I trade choppy ranges. I trade volume weighted average price and 200 EMA pullbacks, dips, bounces, breakouts. My better trades outside of day trading are my swing trades and investments. I'm up thousands on swing trading and investing this year. And, again, we've got a nice little portfolio it's a little bit light right now, to be honest. When markets are breaking highs, my portfolio is kind of light. So my favorite strategy is I mostly invest and swing trade only blue chip stocks. I'm not going to, with a few exceptions, I am holding some smaller cap stocks, but no penny stocks really. I avoid those. And again, I mostly just attack overreactions on the downside. I very rarely short anything. I almost always, I'm looking for blue chip stocks. A lot of times this happens around earnings reports, but I'll look for blue chip stocks to pull back heavily. Look for big extended dips in blue chip stocks. A good example of this is, what did I do this on? I did this on Meta. So I did this on Meta. I am now out of Meta, so I cut my position here. But so Meta reported earnings back here on the 24th of April. So on 24th of April, Meta reported earnings. What it did, it dropped 20%. It dropped from $500 all the way down to under $400. It actually got down to $399 down here. And so when it did that, I'm sitting there with, excitement. I'm sitting there. So I'm sitting there excited. And so once we get that big pullback on Meta, I buy that dip. That's just an emotional overreaction. And earnings were not bad either. They weren't terrible. They were mixed, but they weren't horrible. And so when Meta drops 20% plus on decent earnings, I'm there to buy that dip. And the logic of this trade is that it's almost certainly going to bounce back short term. So short term, we're almost certainly going to get at least some of this gap to fill like this. We're almost certainly going to get a little bit of this filled, right? And so if it does fill the gap, I can take profit. If it doesn't fill the gap and say it does something like this for a little while, I can sit on it and I can usually hold this long enough to where eventually I'm going to be profitable from this. Eventually Meta's going to rebound some. And so I can hold it for years if I need to. And so that creates a very high edge situation where it's kind of like a mix between investing and swing trading, where I don't mind taking profit short term. But if it keeps dipping, I can dollar cost average into it over a longer period of time and almost certainly make money doing that. And so if I buy my pullbacks effectively, where I'm getting in high edge positions, this works a large majority of the time. I did this a lot over the past few weeks. Some examples of what I bought: Airbnb, green. CRM, Salesforce, very green. CVS, I'm green. Let's see, we bought Home Depot, very green on Home Depot. Made a bunch of money short term from Home Depot doing the exact same thing. I'm looking for stocks that are down over the last like 2 or 3 months, but are green on the year. So I'm buying big pullbacks, extensions. Intel, I did this. I'm green on Intel now. Netflix, I bought Netflix a couple weeks ago at 570. It's at 650 right now. So I'm very green on that one. Roblox, I did this with Roblox. I'm green on Roblox. I did this with Shopify. I am now green on Shopify, which is great. I did this with Target a few days ago. Very cheap entry. Very green on that one. I did this with Uber, and so I'm green on most of these that I did this on. Now again, it does depend on the market. It's not going to always work. If I get caught in a bear market, I might have to sit on some of these positions longer. But again, I don't mind sitting on these. CPI reports at 8:30 Eastern Standard Time. Now I'm just buying stocks. I'm buying shares. I'm not doing options. Options are there's too many conditions that have to hit for options. And again, my TOS account's got 100. Basically 6 figures in it. And so I'm not going to restrict the trading through buying options and have time decay and all that stuff affecting me. I want to be able to sit on it as long as I need to, years if I need to, and not have to worry about my position creeping in. And I have the buying power to do it. If you're holding things longer term, there's no reason to buy options unless you're buying leaps. Yeah, all good, Tyler. What keywords do you listen for during the FOMC? I would listen for like recession, inflation expectations, rate height expectations, whether he says inflation is elevated, what he says about the labor market, the job market. I would specifically look at quantitative tightening mentions. So like last time they were talking about slowing QT down. They were slowing their expansion of their balance or their reduction of their balance sheet down. So what that means, slowing QT down is a dovish thing, right? Quantitative tightening. So the Fed can influence interest rates in a few different ways, right? The first one is just simple, directly raise or lower short-term interest rates called the federal funds rate. Eventually, it'll trickle into long-term rates, but they can influence short-term rates called the federal funds rate directly. They can raise those rates. That's what we're doing during the FOMC meetings, is we're announcing the rate decision, whether they're raising short-term interest rates, whether they're lowering, whether they're pausing, which is what they've been doing lately. So that's the first step. They can directly influence rates in that way by just straight up raising or lowering rates. A more desperate decision, which is actually a more recent thing that the Fed started doing, was quantitative decisions in this regard, right? So they started doing quantitative easing, which is a more desperate move designed to influence rates faster than straight up raising or lowering short-term rates, right? So quantitative easing is when the Fed steps in and they buy up a bunch of bonds, expanding their balance sheet, right? And by doing this allows banks to lower interest rates to consumers because it injects liquidity into those markets, into the bond markets. And so by the Fed stepping in and buying up a bunch of bonds and expanding their balance sheet in that regard, they ultimately lower interest rates to consumers. But it's a more desperate decision, right? They'll only do this if we're in trouble. Like they did this in 2020 to save us from much worse, results of 2020 and everything. They did it in 2008 Then when they play the other side of that, like if inflation is crazy and rampant and out of control and they need it to drop faster, they'll do something called quantitative tightening, which is kind of the opposite of QE. It's not exactly the opposite. Like quantitative tightening is most of the time not direct QT. So most of the time they're not just selling bonds. Most of the time they're just it's what's called passive QT, which means they're letting their current bond holdings in their balance sheet mature and run off. Like when a bond matures, that's the end date for your bond. So like if I buy up a 10-year treasury bond today, maturity date's going to be in 10 years from now. It's going to be on June 12th, 2034, right? So it's going to be in 10 years. That's the maturity date. So they let their current holdings mature and run off, and that reduces their balance sheet over time. This takes liquidity away from the bond market and makes banks keep interest rates high. And that's what we've been doing to combat inflation over the past few years. I think they started QT in 2022, I think is when they started it. But again, the last FOMC meeting, they talked about slowing it down or stopping QT, which again is a dovish sign. If you want interest rates to go down, that's good news for you because it means, they might start slowing QT down or ending QT. You're going to hear about it after the fact. So this is usually this is going to happen in between meetings. And so again, that's something you want to pay attention to. You want to listen to whether they talk about QT, what their plan is there. And they can always change their plan. They might come out and be like, yo, we decided to continue QT. We decided to continue reducing our balance sheet. And again, that'll mean higher interest rates for longer. Anybody know what happened around 1 p.m. yesterday? Let me see. So I hope that makes sense. What time is CPI in Europe time? Google's your friend. Google's your friend, brother. Watching current stats costs money. You're wasting trade time. Yeah, but I mean, listen. You're looking at, if you think that if trading is something where you've got to get a bunch of trades in a small period of time and you're packing like your time thin, like that's the worst mentality you can have. Trading like you have to take a trade or you're going to run out of time is the worst trading mentality you could ever have. There's a very famous quote, money is made in waiting, not trading. And that's the mentality you have to have. You have to understand there's always another move. You can always find other trades. You don't have to take any specific trade at any point in time, and treating your portfolio like that is the case is going to just cause it to go down most of the time. But everybody's different. Y'all trade how you want to trade. Yeah, the bond auction yesterday at 1 p.m. is what you're talking about. Yeah, GameStop ripped up. All right, guys, NVIDIA at 121.40s here, chat. NVIDIA at 121.40s. Higher than expected rates. What are you talking about? Inflation rates or the rate decision? Bro, I answered a long leverage 10x. Is it good? I have no idea. Leveraging 10x doesn't seem good, but I'm not sure, bro. Yeah, well, that's what quantitative easing is. All right, guys. So again, GameStop spiked up to $30. The SPY up to 538s roughly. Meta sitting at 507s. NVIDIA has been on a little run this morning. Is GPT down? I'm gonna have to look somewhere else. Yep. All right, guys, we got 800 people here live. I forgot my timer here, chat. We still got over an hour left. So we still got an hour and about. All right, I'm going to try to get this timer exactly right. Yeah, my toss wasn't out at all yesterday. Yeah, so my toss wasn't out at all yesterday. All right, guys. All right, so this is about as accurate as I can get in terms of the timer. So again, we got an hour and 1 minute left until CPI inflation data drops. Be ready, Chad. Be ready. Yeah, about an hour until CPI inflation. I'm not sure about the euro US dollar. No idea, brother. Looking at our poll numbers here, we asked people, does CPI data come in higher or lower? 45% think higher, 23% think lower, 21% think as expected, 11% say I don't know. Yeah, the Schwab issue apology. I don't know. I didn't see that. Again, I wasn't looking at it. All right, chat. All right, guys. ARM has had a big bounce back. It dipped all the way down to almost 80. It's kind of volatile, though, man. ARM's hard to... I don't know. Yeah. Could you elaborate how it affect Bitcoin? Bitcoin typically moves like the regular market does in moments of inflation data reports. So if inflation data comes in lower than expected, I'm sure Bitcoin is going to probably go up, and if inflation data comes in higher than expected, I'm sure Bitcoin's probably going to down. I might be wrong though. Anything could happen. Nobody really knows. Nobody really knows. Chat. So just be smart. All right, guys. Yeah. Okay. There we go. Stick it right there, maybe, or maybe right here. There's a video though. Nvidia is ripping up. Look at Nvidia, got up to 121.60s. It's trying to move. It's getting up there. AMC is diluting again. Are they really? Quantitative. It's not that simple, Brandon. So Brandon says quantitative easing. Quantitative easing is money printing. So with QE, the Fed creates online reserves is the easiest way to put it. They create money, right? And then they use that money and they buy up bonds and other financial assets. This ultimately contributes to higher liquidity and stimulation in the bonds market, which allows, which ultimately allows banks to lower interest rates because the yield goes down on the bonds and the prices go up. So this allows banks to lower interest rates to consumers, and again, it ultimately prints money, lowers interest rates. The opposite of is quantitative tightening. Now, again, it's not bullish or bearish innately. Like it can be bullish, it can be bearish depending on what the economy looks like at any moment in time. There's a difference between the stock market and the economy, right? And so QE is a bullish sign for the economy. I mean, it's a more desperate sign, right? But typically what follows is a stronger economy after QE. The opposite is true for QT, right? QT, if inflation is a risk, then QT can be a good thing, So again, they've been doing quantitative tightening, which means they're not buying bonds. They're not expanding their balance sheet. They're reducing their balance sheet through letting their current holdings mature and run off. It's taking liquidity away from the bond market. It's causing the price to go down, but the yields to go up for bonds, and ultimately bringing interest rates down a little bit, right? They've been doing that for the last few years, and yeah, I wouldn't really call them bullish or bearish. They can be under different circumstances. FOMC's at 2 p.m. Please stop spamming, Beta. I don't know about Euro, US dollar. I'm not a Forex trader, brother. Full port evals. Let's go. What do you mean, Jay? No, I don't think that makes any big difference, Mars. He says no politics, but do you think all the immigration issues play a big role? No, I don't think that influences inflation too much. Not a crazy amount. The bigger risks. The reason we have inflation, guys, is because of the QE that the Federal Reserve did in 2020. Right? The Fed stepped in. They did QE in 2020. They brought interest rates down to almost zero. They also sent out stimulus checks, right? So all of these things, right? Higher still. You can see, I always talk about the same examples, but you can see the prices fluctuate in like Rolex prices as an example. Rolex prices doubled after 2020. Bernard Arnault, Louis Vuitton prices doubled. Prices skyrocketed after everybody got stimulus checks and when the Fed, brought interest rates down and printed money. Yeah, so prices spiked from that. That's what we're currently dealing with now, is the 2020 decision. Now, and again, you can't really knock it. Again, the public is very rarely happy. And so, if the Fed didn't step in 2020 and do QE, they would say, I'm sure people would say, oh, well, they're just watching it. They're not doing anything. They're just watching it happen. Why are we paying them? You'd hear that if they didn't do QE. And then we do QE and we bring interest rates down and we stimulate spending and we print money. And the consequence is inflation. For the following few years, inflation spiked up to almost 10%, right? And so then the Fed has to take a more defensive approach in regards to inflation. And that's when they step in and they start doing QT. They pivot to a hawkish stance. They start rate hikes. They raise the federal funds rate. And they did that for multiple, if you look at the Fed funds decision, you can kind of see it. So again, here's the federal fund. Here's short-term interest rates that the Fed controls, right? If we look at the last 5 years, here's after 2020, right? Here's after 2020, they stepped in, they brought rates down. You know, again, this is when we were at risk for a recession or depression. You know, so again, if we're at risk for a recession or depression, the Fed doesn't want that to happen. They're going to step in, bring interest rates down. They're going to print money. They're going to buy bonds, expand their balance sheet, inject liquidity into the bonds market. This allows banks to lower interest rates to consumers. And so by bringing interest rates down, you know, and they kept them down, you know, for years. They kept them down until inflation spiked, right? So here's the federal funds graph. If you look at a CPI inflation graph, you can kind of see the correlation here, right? So here is CPI inflation, right? So here on the left side, we've got the federal funds rate decisions. And on the right side, we have CPI inflation. And so what you see here is this, okay? You see the Federal Reserve stepped in and they brought interest rates down, right? And what was the consequence of this behavior? The consequence of this behavior, by lowering interest rates and keeping them down this much, was inflation. If you look at the right side, what happened to CPI inflation? It started to spike around that same period too. So like, look, let me help. I'm trying to get you guys to be able to see. So yeah, here's the, like, so look, what happened? Inflation started to spike. You know, by April of 2021, it was at over 4%. By June, it was at 5.4%. By November, it was at basically 7%. By December, it was at 7%. By March of 22, it was at 8.5%. You know, by June of 22, it was at 9.1%. And so the consequence of bringing interest rates down like this was this right here, was inflation, right? The consequence of stimulus checks and bringing interest rates down was inflation. Inflation spiked, got up to almost 10%. And so once this happens here, once we get this top, the Fed plays the other side. They say, okay, inflation's spiking, let's balance it. And what do? They start raising the federal funds rate. They start raising short-term interest rates to consumers. And that's what you see here, right? So if you look at this, this is them reacting to this here. Inflation spiked. What do? They raise the federal funds rate. They raise short-term interest rates. They do QT. They reduce their balance sheet. They take liquidity away from the bonds market. And this causes inflation. This causes a push down in the economy. It pushes the economy down. It causes less spending, and by less spending, what do we get? We get less inflation problems, right? And so after this, and so they raised the federal funds rate aggressively from 2022 to 2023, and then in 2023 they started pausing rates, and we've been pausing rates since then, right? We've been pausing rates since then. What this did was it brought inflation down. Now it's not actually bringing inflation down, it's slowing it down. So instead of being 9.1%, inflation is now, you know, anywhere between 3 and 3.5%, which is where it's been essentially since May of last year. So that is the Fed. That's what they're doing. That's the correlation. That's how they're controlling it. I hope that makes sense, right? And so now we're basically in this middle range here, 3.5%. The Fed's been pausing interest rates up here. And so, yeah, hope that makes sense. Once you start to understand the nature of that, you'll understand like what the Fed's saying a little bit more. Yeah, GameStop right up there by the previous closing price. Is there a chance of a rate hike? I don't think so. Anything could happen. Anything could happen. Nothing is definitive, right? Anything could happen. Nothing is definitive. So yeah, anything can happen. Nothing's definitive. So in theory, we could raise rates today, but we're almost certainly not going to. We're probably going to pause rates. I would say a cut is more likely than a hike. So we got a donation. Thanks so much. What are your views about the results of CPI data? Where's the market going today? I appreciate the donation, G9. I have no idea what CPI is going to do, brother. Nobody does. And anybody acting like they do is just trying to tell you what you want to hear. You know, you got people that are selling courses or mentorship programs or whatever that are trying to act like they know what CPI is going to show up as. You got other people that are telling you every freaking CPI report, the market's going to crash. Both of them are usually wrong. Nobody knows. You know, nobody knows. Today especially, we have the FOMC meeting following CPI. So, yeah, I genuinely do not know what CPI is going to show up as. Expectations are 0.1%. Year over year, 3.4% expected. I'm going to go with 0% is what I'm going to say for CPI, which I know is probably not going to happen. I'm going to guess 0%. for CPI month to month. And then on the year, I'm gonna go with 3.3% on the year and 0% on the month. That's my guess. Again, straight up guess. I don't know what we're gonna get, guys. This is just a straight up guess. Nobody knows. But I appreciate the donation. I always try to be honest with people, though, which is, if I'm honest, I'm gonna tell you guys the truth, which is that I have no idea what this is gonna be. You know. But yeah, thanks for the dono, brother. I appreciate it. Hey, thank you, G9. Yeah, no, those are my views. Are I essentially don't know. Nobody does. I'm just, you know, I'm guessing like everybody else. But good luck. I hope you guys make money. I appreciate the donation, brother. All right, guys. Yeah, so SPY dipped down a little bit. All right, guys. So yeah, looking at everything else here, I'm watching GameStop. GameStop trying to get over 30s. It's rejected that previous closing price a couple different times. You can see it right here. I hope it breaks it. I'm in it. Let's hope it goes up. Yeah, listen, guys. I'm gonna give you guys. I see somebody else short asking. I have 10K. What 3 stocks should I diversify into? I have no idea, brother. Listen, asking me specific questions like that, I'm not a professional stock analyst. I have no idea what 3 stocks you should buy, and asking me again, I'll tell you stocks that right now it's hard for me to find stocks that I want to buy. But asking what 3 stocks you should buy, it's too vague. You know, you got to tell me what your plan is, and even then I have no idea what's going to happen. I'll try to figure out like what I would personally do, but that's just what I would do. I can't guarantee it's going to work. Nobody can. It depends on what your plan is. Are you trying to invest? Are you trying to swing trade? Are you trying to, you know, buy for today? What are you trying to do? Yeah, Apple flying up. You're popular, John, 100%. I know, man. Top 3. High inflation, bad for the economy. Well, good for the economy, bad for inflation. Bad for consumers. When are you going to trade, bro? Honestly, I'm kind of just attacking choppy behavior right now. We got inflation data dropping in less than an hour. So, I mean, we'll trade today. But we're also not going to force trades in super choppy times. Let's see what else we got. Okay. All right. Rate cut is overdue. In what way? Chasing news. I get some people might want rate cuts. Again, I'll tell you guys the same thing. Like, listen, people are struggling in real estate right now. Mortgage brokers, lenders, and real estate agents are struggling right now. And so they want rates to go down. But rates going down is not a good thing right now. Inflation is a terrible thing at this point in time. Inflation is rampant. Super high inflation. You know, just it's incredibly risky part of the world right now. So we are trading this a little bit here. So again, you can see we're up 35 bucks. Inflation is rampant right now. Prices have gone up so much over the last 5 years that we can't deal with higher prices. Prices don't go down either, they slow down. And so we can't handle more price spikes in that situation. So again, the people pushing for rate cuts too early, most of the time they're in that industry, and they're some way related to that industry in real estate or mortgages or lending. But again, the problem is that if you start cutting rates early, like if you start cutting rates now, the problem is that eventually it's going to cause inflation to probably spike again. And so by inflation spiking again, it can snowball, get out of control very, very, very fast. And we can have another ridiculous inflation spike. And people are, you hear people, talk about how bad things are. They think we're in a recession, but we're not. We're nowhere near a recession. The problem is the other side. We are too high of inflation spikes over the last 4 or 5 years. And again, prices don't go down. And so if we cut rates too early, what do you guys think is going to happen? Prices are going to freaking rip up again, and prices are going to stay there, and it's going to be very difficult to get them to go back down. You hear people are working a lot because they have to work to be able to afford things because prices are so high right now. And so again, it's a situation in which personally, I think we should keep rates as high as we can for as long as we can. Now, again, we can't do that forever, indefinitely, but I think we should keep them high until next year. Personally, but again, we'll see. Nobody knows. We'll have to wait and see. Time will tell. Well, rates are already up. I don't think we should rate hike. I think we should just pause. How does CPI affect precious metals? I mean, it directly influences them. Gold is directly influenced by inflation prices or inflation rate. All right, so we are playing around with this one. We got 2 contracts. I'm trying to attack a range here is what I'm trying to attack. So again, we bought this dip. Inflation data drops in about 40 minutes. So unemployment numbers are skewed based on part-time jobs. Right, but that's more of an argument, guys, for keeping interest rates high, right? If you think unemployment numbers are high because so many people are working, why do you think so many people are working? Well, we're going to cut this. We just lost a little bit here, and that's okay. But yeah, why do you think so many people are working, chat? People are working right now because they have to work because inflation is such a bad spot, So many people have to work right now because inflation is so rampant. Again, that's the thing people need to understand is that inflation is out of control. And so with that out of control inflation, people have to work more to afford things. That's more of an argument for keeping interest rates high and discouraging inflation, in my opinion. But everybody's different. If I own my home. See, yeah, but again, this is real estate related, Michael. And again, I'm here to tell you, like, regardless of people, again, I get mortgage brokers are struggling, but we can't rip prices just to pander to mortgage brokers and real estate agents, bro. We just can't. The economy can't handle that right now. We've already, again, the focus, in my opinion, should be inflation. We can't handle higher prices. Like, inflation has gone up so much, and people are still, struggling from it, right? You think people are struggling now. Imagine if inflation spikes up another 10%. People are really going to be struggling in that situation. And so, it's not always a good time to buy a home. And again, people in those industries, real estate, mortgages, lending, they need to understand that it's not always a good time to buy a home. You know, we've had 20 plus years of low rates, right? Like let's control inflation a little bit better before we just bring inflation or bring interest rates down just so people can, you know, like I think it's a very risky thing to bring interest rates down too early. This might be the cut for USA. I don't think we're going to cut today. I mean, it's possible, but it's unlikely. I just don't think we're going to cut today. Anything can happen, though. We really could get anything. All right, guys. CPI data drops in about 40 minutes here. 40 minutes. We already got 1,300 people here live watching. Thanks so much for spending your morning with me here, guys. We appreciate it. You make sense, John. I appreciate it. I try. Inflation is out of control. Guess what else is out of control? Government spending. Do you see the correlation? Of course there's a correlation there. That's what quantitative easing is. Again, to go back to it, guys, what got us in this inflation mess is 2020, right? And again, this is why you get a lot of real estate professionals upset, right? I'm going to tell you why, okay? It's because what happened is in 2020, the Fed stepped in and they cut rates, first of all, but then they also did what's called quantitative easing. Okay, which quantitative easing, what it really is it's quantitative easing is money printing. It's essentially when the Federal Reserve prints money, they create bank reserves for themselves. They're essentially printing money, and then they use those bank reserves to buy bonds, to buy financial assets, and expand their balance sheet through bond purchases mostly, right? What this does is this injects liquidity into the bond market. It brings it pushes the price of bonds up and the yields down, and causes banks to be able to lower interest rates to consumers. Through these low interest rates, right, the consequence of these low interest rates and the consequence of this money printing is inflation, right? We showed the correlation earlier where the Fed stepped in and did this in 2020. They did QE, they did money printing, they brought interest rates down, and they sent out stimulus checks. All of these things contributed to what? Way higher inflation. Inflation spiked up to almost 10%, right? That's what we're still dealing with to this day right now, is the QE that went on in 2020, the stimulus checks, the money printing. That is what the economy is still dealing with in regards to inflation. So we're in another trade here. Again, we're up on the day. We're up about $100. Attacking choppy behavior. So we're up about $45 on the day. Small little day here. You can see my gains right there. But yeah, we're still dealing with that right now. And so, and the thing about inflation, guys, and again, if you look at like real estate and mortgages and lending in 2020, after 2020, real estate agents, mortgage brokers, lenders thrived. They made so much money because rates were so low and everybody wanted to buy. Everybody wanted to get lending. Loans were cheap. And so they made so much money. And some of them got themselves in bad spots and bad positions where they did all that. They were making so much money, they thought it would never end, and then it did. Then the check came, right? And so then a lot of them started struggling because they were used to making so much money like right after 2020. And so when the Fed started raising interest rates, when MBA mortgage rates skyrocketed up to 7-8%, which isn't necessarily conventionally high, but it's high enough to where people looked at the rates that they were getting prior to that at 2.5%, 3%, and they're looking at over 2 times that in 7 or 8%. And they're saying, nah, man, I'm not trying to get any loans right now. I'm not trying to get a mortgage right now. I'm not trying to refinance right now. And so lenders had their business dump. Their business went down. Real estate agents are struggling right now as well. The conventional appeal of real estate is that you could buy your home, get a mortgage, you can own your home, and pay less than you would be paying in rent as long as you put a decent down payment. That's not true right now anymore. You know, you're going to pay more money in a mortgage than you are in rent because of high interest. And so that's why a lot of those professionals, they want rates to go down because their business took a hit, right? But, you know, that's the nature of it. You know, they're still they're still making money, but they're not making as much as they want. But we can't spike inflation because of that. That's a silly thing. I think we have to control inflation. First, we got to keep interest rates high. We have to control spending. And if we don't, then prices are going to go up another 10%, and then people are really going to be unhappy. They're really going to be upset. They're really going to be struggling. More people are going to have to work. You know, it's going to get worse, and that's not what you want. Yeah, so catch it back up on the chat. They should not have done that. They should let the cycles of minor recessions occur. They happen in cycles and are necessary. 100%, I agree. But they did do it, and inflation did spike. And now we can't handle more inflation problems. And so we got to focus on keeping rates high. We got to focus on, we got to focus on keeping rates high. All right, so GameStop up to 31s here. NVIDIA at 122s. SPY bounced up a little bit. So we are green on the day. Most of them started a podcast. I mean, I've been streaming since way before any of that stuff. We were one of the OGs of streamers. In the stock market, that is. Stock streamers, day trading streamers. Yeah, GameStop just went green on the day. Look at GameStop. It's now technically green on the day. I think he's very smart, Joshua. Cohen? I think he's smart. All right, guys, we got 30 minutes. All right, we're day trading here. Again, we're attacking chop. We pulled back some. All right, so we got a little bit of a spike. Could add some more to this. I'm gonna go ahead and add to it down here. We got a little cushion we can play with. I'm just looking for choppy behavior. I think the SPY is a lot of the time choppy leading into it. Do you like choppy or rally days? I mean, I'm neutral to both of them. Both of them I have strategies that I'll play. I guess I like rally days. It's easier to day trade sometimes. It depends on what kind of choppy day. Like if it's a choppy day, all right, so we're going to cut this and we're going to get out there. So we're up about 110 on the day. Yeah, I mean, it depends. So if it's a big day like today, like FOMC, CPI day, and we're trading the chop leading into that, that has a very high edge. I could attack choppy short-term behavior, make money, and then maybe we'll get some volatility from the report. That happens a lot. But if it's just a regular day, I'd rather a rally, Yeah, can y'all not hear? Is the music too loud? Crypto market's interesting, it's been mostly sideways though since March, so crypto market's been flat essentially, I guess. Yeah, so we got the press conference today. Tomorrow we've got PPI data. Next week I'm looking at stuff. Next week we got retail sales, Empire State Manufacturing. We got Harker speaking, some Fed members, jobless claims, flash services. Okay. All right, guys. SPY bounced up a little bit here. It's good. billion in no debt for GameStop. CPI probably as expected. We'll see. Again, nobody knows, man. The real question is, what is Powell today? We're almost certainly going to pause rates. You know, you hear people really obnoxious, like they know that CPI is not going to come in low, or like they know CPI is not going to come in high, or they know the market's going to crash for CPI. And again, I always describe it, and it's not like, if you look up the Dunning-Kruger effect, it essentially means people with limited competence in a particular domain overestimate their abilities, right? Like basically, I'm a white belt in jiu-jitsu, but I think I'm like the top 3 greatest white belt of all time ever in the world right now, and it's only because I haven't rolled with super high level people that I think that, right? That's the Dunning-Kruger effect in a nutshell, is my white belt jiu-jitsu skills. I'm a 2-stripe white belt though, so I'm not bad, but you know, definitely Dunning-Kruger effect there. Still, in trading terms, you know, you hear people that are really obnoxious about it. Like the people who act like they know for sure what's going to happen, like they know for sure it's not going to be this or for sure it's not going to be that, typically know the least. Because people that pay attention to these reports understand nobody knows what unless you're an insider at the Fed, nobody freaking knows what this data is going to show up as today. Not only that, but nobody knows what the reaction to this data is going to be. Nobody knows if we're going to get a good reaction, a bad reaction, an up reaction, a down reaction, muted reaction because of FOMC. Nobody knows. We can only react, and that's the mindset you need to have for these reports, is a reactionary mindset. Understand nobody knows. Anybody that's claiming to know is usually just trying to, you know, they got a 50-50 shot. But experienced people understand the variance, I guess is the easiest way to put it, that occurs from this. What's the difference in impact between month over month and year over year? Well, month over month is short-term increase or decrease. Year over year is year over year. Congrats on the BJJ, Jody. Yeah, I love jiu-jitsu. I train a lot. My coach told me yesterday I'm too tunnel visioned for guillotines. But honestly, I base my whole game around the front headlock position, you know. And so I have really good takedown defense, and so it's hard to take me down. And I usually make that a little bit better because people are so afraid to get guillotined by me, because guillotine's like my favorite move. I prefer the arm out guillotine, or like a Marcellatine. Or yesterday, my coach showed me a 10-finger guillotine. Oof, he caught me in one. It was good. But yeah, I usually build my game around that. So where people are really reluctant to shoot in on me because I'll guillotine them. But he said, like, this is what my coach said. My coach said, you're going to have a really big rise, but if you don't change your game, you're going to have a really big fall if you don't change your game up a little bit. He said, I'm too reliant on the guillotine. And he said, I'm doing it because it works, right? Because I catch people with it. But he said that essentially I'm letting that cause me to get too tunnel vision with it. And maybe that's true. Again, the way I look at it is I'm trying to build my game around the front headlock position. And so, and I don't just go for guillotines. I'll go for like Darces, Anacondas, front headlocks a lot. Sometimes I'll take their back. You know, I've been using a lot. I've been using the transition of mount to... man, what's it called when you have somebody's arm pinned behind their head, right? What's it called? My jiu-jitsu guys know exactly what I'm talking. I can't think of the name of it right now. Tell them I'm the top 3 white belt in the world right now. AMC at 524s. Do you think martial arts training would help you in real life? I mean, I do it because it's fun. I've been a big MMA fan for a long time. And so I've always had the itch to learn, and I've only started learning it in the last few years. But jiu-jitsu definitely is good for real life, you know. But again, with that said, I'm in Texas. And so, you know, we've got other things here that are pretty good for self-defense. So, I don't know. Depends on where you are, I guess. Gift wrap. Yeah, gift wrap. Fred knows what's up. Gift wrap. So my transition, I've been getting people at gift wrap from mount and then using that to transition to a back take and a rear naked choke is what I've been doing a lot. That's kind of been the transition and the sequence that I've been working on a lot. You know, mount, gift wrap, back take, rear naked choke. If the rear naked choke doesn't work, I'll transition to like an arm bar or something. But all right, guys, we got 22 minutes. 22 minutes roughly. You can see right here. 22 minutes countdown. Hamzat versus Whitaker. I don't know, bro. I think Whitaker might shock some people here. Hamzat is great. He's a little chinny, I think. He leaves his chin up in the air. And I think Whitaker's got some power. So it'll be an interesting fight. I don't know. All right, look at GameStop spike. Look at NVIDIA spike it up. NVIDIA's choppy as well, moving back up to the top of this range at 121.60s. 10-year bonds are falling, and so they're indicating already that we're going to fly today. Not necessarily. I wish it was that easy. Hamza will eat them? Maybe. Gift wrap equals millennium slang for guillotine. The gift wrap is a completely different thing than a guillotine, brother. I'm not sure if you understand jiu-jitsu, Jam, but it's a completely different thing. Gift wrap is when you have somebody's arm pinned behind their back and you are holding their arm like this and they can't move. You can also do it like this, right? One of them's in it like a reverse gift wrap, but the both gift wraps. One of them is like this, you know, where you have their arm and you can't really do anything and you're stuck, right? That's a gift wrap in jiu-jitsu. You use it to take people's back is what I've been doing with it, you know. Yeah, what's up, Douglas? I'm not sure what the strongest sector to go long is. I just want to keep my current poll up. Maybe after CPI. Power bomb. I grew up in Stone Cold Steve Austin, you know, era. I was really into professional wrestling for like a couple years when I was young. And so I was really into professional wrestling when I was young. So I was into wrestling probably when I was like 6 to 7. Eventually I grew out of it though. I think I realized it was fake and I grew out of it. This was back when TV was a thing. Arm triangle? Arm triangles are hard to finish if somebody knows what they're doing. Like you could try to answer the phone if you're in it, but you just try to turn to your side and kip out of it. Yeah, I did see that, Sam. This is the 2-on-1 versus Eddie Hall, bro. Yeah, I'm not trying to get in the ring with Eddie Hall, dude. Yeah, no, it's a good idea, Douglas. I want to keep my current poll up, brother. Boxing and wrestling are key. Everything else is move. Yeah, I mean, I don't know. I think jiu-jitsu has its place. They all have their place. I don't like in jiu-jitsu you get like butt scooters and people who just pull guard, and I roll with a lot of people like that, right? They just kind of pull guard and butt scoot towards you. You know, in real life they're gonna get soccer kicked. You know, the way I train is a little bit better for self-defense. I think like I'm very stand-up oriented. Like I never pull guard. I do okay with takedowns, and I think guillotine is kind of like a natural submission for self-defense too. But again, I'm just a white belt. Like, right? I don't want it to seem like I think I'm better than I am. I really am just a white belt. Especially in a gi, if I roll against anybody blue, purple, brown, they're tapping me out probably, which is the nature of white belts. Anyways. BJJ useless against multiple opponents? Well, yeah, I mean, most things are useless. I mean, I train a little bit of other stuff. I train like a little bit of Muay Thai and stuff like that occasionally. So it's not just jiu-jitsu. I don't think you should limit to just jiu-jitsu. Dump gold. Let me see. Where's gold at? Gold broke lifetime highs. It's been very choppy today. Very choppy. It's now down to the bottom of the last range. You can see the range in gold, right? So here's gold here. Here's a daily chart. Gold has been in this sideways range since, you know, really April. You can kind of see the range here. It's been in this little sideways range for a minute now. You can see the bottom of the range is here, and that's roughly where we're at. We're right here right now, so we're a little bit higher than that. So I don't know about gold. We'll have to wait and see. Earnings season is going to be next month, starting next month again. So we do have about a month until earnings season starts. What are y'all's guess for CPI inflation data? What do you think of hedging positions when trading news? What do you mean by that? Hedging? Do you mean like a straddle? Or is it straddle or strangle? Taking options in both directions and letting volatility play out. Wrestling not real? It's still real to me. No. Arm triangles, you need to roll over to your back to escape. Yeah. You can roll to your side or your back. Arm, it depends on the person, though. If a person's got a really thick, like, it's a little bit easier. If the person's, like, lanky and skinny, it's harder to finish. Yeah, I mean, I grew up with, like, Three Ninjas, Karate Kid. There's a bunch of movies, karate movies I watched as a kid. If you like dividend stocks, looking to Altria. Yeah, I mean, I'm looking for stocks to buy. Honestly, right now, though, most stocks are too extended on the upside. I'm hesitant to buy up a lot of stuff right now, just because the market is too extended on the upside. There's not a lot of... again, the nature of my trading is I'm usually looking for pullbacks and dips, and we don't have a lot of that right now. We have mostly, the S&P's breaking highs. The SPY is at lifetime highs, so is the Q. Like, here's the NASDAQ. NVIDIA's dragging everything else up. Here's lifetime highs on the NASDAQ as well on the QQQ. And so it's just really difficult to make money right now. Or not make money. It's really difficult to find cheap entries. I'm going to wait for things to pull back a little bit first. Yeah. Yeah, a lot of people I'm sure relate. Like Three Ninjas, Karate Kid. Even the old Street Fighter movie was good with Van Damme. Good times, man. Good times. I tried to watch Three Ninjas with my son a couple weeks ago. My son's 10. He was like, "Dad, what the heck did you just show me?" He wasn't into it. I don't know how well it aged, but it's still good, man. With Tum Tum and all those other, I can't remember the other guys' names, but it's good, man. Childhood movie of mine. AMC over the volume weighted average price, over the 200 EMA, over the previous closing price, technically green on the day. Again, the SPY consolidating right around lifetime high. So is the Q. I don't know what to expect here. So we got CPI dropping. Stocks are right around lifetime highs. And so I'm hesitant to buy up stuff. The Warriors, yeah, great movie. Rocky. Yeah, dude, I remember Tum Tum. I think, dude, I can't think of him. Colt. Yeah, it was Colt, Tum Tum, and something else, dude. I can't remember who the other guy was. One of them is crazy. One of them eats a lot. And then the other one is, I don't know, man. Man, that movie, they basically stole Mr. Miyagi. The whole character of Mr. Miyagi in Three Ninjas was basically stolen, They got a Wish.com version of Mr. Miyagi. Basically the same freaking guy. Different actor, but essentially the same character. Anyways. The old Street Fighter was so bad. I know, but for a 10-year-old, it was good. All right. For a 10-year-old, I loved it. Don't judge me, okay? Anyways, Rocky, yeah. Adrian. Yeah, dude, the old Street Fighter was good but bad, Apple broke. Yeah, Apple ripping up after their WWDC conference. Apple at 207s right now. What a crazy gain. This is what's leading the market, dragging the market up over the last few days. Again, GameStop is up there. We still got 12 plus minutes, about 15 minutes left or so. We got over 2,000 live here. I'm going to put this in sub-only mode. Gold, buy or sell, buy or sell. I'm not going to... Look, guys, I'm going to tell you this. If you spam buy or sell gold, I'm going to ban you. Okay? Every major economic report, we get the gold buy or sell spammers. And again, I'm going to assume you're bots. Nobody knows if you should buy or sell gold, including me. Please stop spamming it. I'm going to ban you if you do. Again, this is the last warning. Yeah, we got 11 and a half minutes here. Yeah, I know a lot of people show up for my economics report. All right, chat. Yeah, we got a big day today. Again, a lot of people recognize that I'm reliable in terms of big economic reports. I'm reliable. I break it down in an understandable way. We cover the news fast. The reason we get thousands of people tuning in for these reports is because we cover it very quickly. And so we'll cover CPI data fast. We'll get it ready. Let me pull this up. All right, so yeah, we are ready. We got CPI data. Again, CPI is expected at 0.1% increase month to month. 0.1% increase month to month. 3.4% is what's expected on the year. It drops at 8:30. We did have NBA mortgage rates come out. 0.1% is on the month expected. 3.4% year over year is what we're showing up as. Or is what is expected today. We also have the Fed decision today, guys. So we got the Fed decision as well today. Very busy day here, so just be ready here. We got everything up. We are ready for it. Inflation data. We are here. We're ready. We got 10 minutes left. CPI drops exactly in 10 minutes. Almost exactly in 10 minutes. We got about 9.5 minutes left. But yeah, at 8:30 Eastern Standard Time, we're going to drop right when it comes out. We're going to cover it as soon as it comes out. And you're going to see a big movement in markets. You're going to see a big movement in the SPY, the Q, gold, Nvidia probably. And so yeah, it's going to be a very big reaction in markets, chat. So just be ready. We got 10 minutes left. All right, guys. Crypto is about to shoot up at 8:30. It depends on what inflation data shows up as. Crypto is going to rocket if inflation data comes in low, I would assume. I might be wrong. Anything could happen. TLT. Is TLT bond yields or bond prices? I always get those mixed up. I see TLT. I feel like these are longer term bonds. Yeah, so. Yeah, so there's GameStop, there's the Q. Would y'all rather the SPY or the Q up, chat? Would you rather the SPY or Q? Yeah, we're trying to include all the charts we can. People are asking me for Nvidia charts, the dollar index, gold. So we got a lot of different stuff up. For the time being, I'm going to move GameStop. We're watching GameStop, but I'm going to put up gold on the left side. There's gold. There's the SPY. And then I can put up one other thing. The Q, SPY. See, people are so torn. Let me see. SPY, Q. All right, most people want the SPY, so I'm just going to keep the SPY up. We also have the Dixie. So here's the dollar index on the right side. So here's the Dixie. And then here's gold on the left. Here's the SPY in the middle. So the S&P in the middle. Dollar index on the right, gold on the left is what we got up. Yeah, you can put the 10-year treasury yields up, which is, what is TNX at right now? It's at 4.3%, 4.39%. Yeah. All right, chat. All right, guys, so the dollar index is moving up. Typically, the Dixie is going to have an inverse correlation with markets. All right, leading into this report, I'm going to actually see if we can take... Again, we might have choppiness leading in this report. We don't know. SPY is right at the middle of the volume-weighted average price level. Does Powell speak today? Yes. So, Darren, so Powell speaks at 2:30 Eastern Standard Time today. So Powell speaks every 6 weeks. We have the Fed's rate decision, how they're going to influence short-term interest rates. They could either they're almost certainly going to pause rates. But yes, Powell speaks at 2:30 Eastern Standard Time today. We're going to stream the whole thing live right here, so you'll be able to watch the whole thing live as it happens. All right, guys, we got about 6 minutes left. 6 minutes. Six minutes left. Tomorrow will be a better day to trade once a direction. Yeah, but remember, tomorrow we have PPI inflation data coming out too. So tomorrow we got data coming out as well. Tomorrow's not a slow day either. There's two sides of the inflationary coin. Today we have CPI, which is the consumer price index. It's how much inflation is happening for consumers. Tomorrow we have what's called PPI, the producer price index. It's how much prices are rising for producers or businesses. So that drops tomorrow. So today CPI, later on today FOMC, tomorrow PPI. So very busy in that regard. All right, chat, we got about 5 minutes left. We got about 3,000 people here live. Yeah. The impact of CPI on crypto. Crypto usually moves with the rest of the market, but it's unknown. It's hard to tell. Like, it's going to be very difficult to figure out how crypto is going to move or anything like that, brother. All right, guys, we got 5 minutes. 5 minutes. Be ready. Your chat, get ready. Give me your last minute predictions. What is year over year CPI showing up as? Expectations are 3.4%. 3.4%. Again, I'm going to go with 3.3% at 0% inflation. That's a guess. Again, it's just a guess. I'm just straight up guessing here, guys. No idea what we're actually going to get. But, you know, bearish traders are going to be mad by a guess, as they always are typically. But again, I have no idea what we're going to get. Let me know what you guys think. What does year-over-year inflation show up as today? We got 3.8, 3.2, 3.6, 3.3, 3.7, 3.2. We'll see. Yeah, my volume's fine. It's on his end. Higher is worse. Higher signals more inflation. So higher means more inflation and problems. All right, guys. All right, so we are kind of scalping some choppy action in futures here. And this is me day trading the futures market where we're out. Again, I'm attacking chop. That's all I'm trying to do here. I'm just going to attack chop. So we're out. We made $165 today so far attacking choppy behavior. In the futures market, yeah, so higher means higher gold prices, right? Not necessarily. Maybe. You know, there's two trains of thought you could have with that. One of them is higher inflation problems. Economics-wise, is going to make people gravitate towards gold to hedge against that inflation, right? That's one argument for gold increasing. The other argument is that gold tends to follow macro equities movement. So if the stock market rips up, gold probably is following it, and higher inflation data in that regard would signal a weaker market reaction and a decrease in gold prices potentially. That's the second train of thought. Either one of those can be true. It's never a definitive 100%. All right, guys, we got 3,500 live viewers here. 3,500 live viewers. I put it in sub-only mode, didn't I? Yes, I did. Hey, listen, guys. Help me hit 150K. We're pushing towards 150,000 subscribers. Help me hit it. We're getting very close. Do it now. Subscribe if you haven't already. Hit the notification bell. I appreciate the love. Thanks so much. But let's do this. Here. We got almost 4,000 people watching live. All right, guys, here we go. We got less than 2 minutes. Again, SPY at 537's here. All right, guys, we got a minute and a half left. Yeah. Here we go, guys. Be ready. Remember, hit the live button next to the play button. Make sure you're fully caught up on stream here, chat. We got a minute and a half. A little bit less than that, actually. We got about a minute and 10 seconds. All right, we got gold on the left, the dollar index on the right, the SPY in the middle. Again, hit the live button if you haven't yet. Cheers, guys. Let's see what we get. Be careful today. Be careful. We could get choppiness. We could get massive volatility. We do have the FOMC meeting later on today. Less than a minute here, guys. Less than a minute. What do you guys think is going to happen? Bullish or bearish equities action? Do you think the equities market's going to go up or down in stocks? Why every time I put money in stocks, they go up or they go down? When I take money out, they always go up because you are attacking hype and not levels. 30 seconds, chat. 30 seconds. 25 seconds. All right, I'm going to pause this. This is a little bit early. We got about 15 seconds left. 15 seconds left. Be ready here, guys. Be ready. All right. Here we go. 10 seconds. Hit the live button next to the play button. Make sure you're fully caught up on stream here, team. I appreciate it. Here we go. Here's the report. 5, 4, 3, 2, 1. All right, there's the report. Big spike. CPI showed up at 0%. Guys, 0%. 3.3. Guys, dude, I got it exactly right. 0% today. Honestly, dude, it's weird. 3.3% year over year. I got it exactly right. 0% inflation data. 3.3% expected. I literally guessed it exactly right. That's freaking weird, bro. That's weird. This is not the first time I've done this either. Bro, I'm telling you, I'm just in tune with the universe here. 0% inflation, 3.3% year over year, 0% month to month. I got it exactly right. Again. That's freaking weird, man. Hey, I'm okay with it. Listen. Somehow we did it again, bro. I don't know how I get these right. I am literally just straight up guessing. The only thing I'm using is balance. I'm balancing it. I'm saying, okay, I'm using balance here. I said it's an election year. Weird, man. Hey, this is weird. Core CPI 3.4 versus 3.5. Yeah. CPI month over month showed 0%. Versus 0.1% expected. Again, we're going to put this up on screen. I got it exactly right, guys. That's so weird, man. That's so strange. The Dixie has fallen. Gold has followed up. The SPY has moved up. Yeah. I mean, listen, people were making fun of me for saying that too. People, again, this is why I always tell about Dunning-Kruger, right? People who think they know the most usually know the least, and people who actually are experienced typically will recognize how little they know. But man, I got it exactly right, dude. Which is rare, but yeah. This is more likelihood of a rate cut with better inflation data. It doesn't mean we're gonna cut rates. It just means this isn't gonna impact today at all, right? So this is not gonna impact today at all. Yeah, today is still the FOMC meeting. Honestly, I would say I've made about 6 or 7 CPI guesses for 6 or 7 months of CPI reports. I've gotten, I would say, 4 or 5 of them exactly right in terms of my CPI. Like, I don't even like making predictions, but when people ask me to, and I do, I've gotten at least 4 or 5 of them exactly right out of 7. Strange. Maybe we're in a simulation and I'm just in tune with it. I don't know. Yeah, so again, SPY moving up, gold moving up. This is why I always tell people, like, people telling people the market's going to crash every CPI report, they're just trying to manipulate views from you. How many times you got to guess a market crash and be wrong about it before you stop telling people the market's going to crash every quarter, every month? It's silly. And it comes from a lack of understanding about markets and equities. Most of the time, markets are going to move up. Equities are going to move up. That's the nature of them. Betting against that edge is silly, and it mostly comes from day traders who transition to investors or economists. The reality is most day traders lose money. And so let's see if the fundamentals changed here. Again, if you haven't already, check out Apex. One of my sponsors is a company called Apex. Most day traders lose, right? And so I think that's still the same. Most day traders are going to lose no matter where you go. This is a funded account program on Apex. What they do is they give me a demo and they test my skill with a demo account first. If I can pass the test with the demo account, they fund me the same amount between 25 to 300K with a 90% split. This right here is a $50,000 funded account. On my other one, I'm up thousands of dollars on. I'm about to request a withdrawal. And so again, they give you a demo in the futures market. In the futures market, you can day trade the SPY directly. You can day trade the Q. You can day trade gold. Patterns are very similar. You can't trade the SPY and Q directly. Let me clarify. You can trade the NASDAQ E-mini, which is what the Q tracks, and you can trade the S&P 500 E-mini, which is what the SPY tracks. You can trade the same price action as the SPY and Q, but there's no PDT rule. And again, Apex gives you a demo. They test your skill with the demo account first. If you pass that test, they fund you between 25K up to 300K. This right here is a 50K funded account with a 90% split. And so if I make 10K in this, as long as I follow my rules, I get 9 of that. 9,000. I also get to keep my first 24,000 in profit, or it's 25,000 in profit as well. No PDT in futures. The patterns are very similar, and it's the best of both worlds. It's limited risk. If you lose, I think right now you can get the 250K challenge for like 80 bucks. If you lose, you're out 80 bucks a month, right? If you pass it, again, you get a you get a 250K funded account with a 90% split. And so it's similar to putting the money up yourself split-wise, but if you lose, it's much less risk. It's the best way to learn day trading, in my opinion. You're still risking something, but not nearly as much as putting up 5K, 10K. And most day traders that put up 5K and 10K, they're going to lose that account. And so you're going to lose thousands of dollars trying to day trade an actual account. This just limits your risk. Although, again, to be fair, most day traders lose. I think that's the same here. You're probably going to lose here as well, because it doesn't matter where you go. Most day traders lose. It's a lot cheaper to lose here, though. So if you want to check it out, they are a sponsor of mine. I'll put this link up. Great way to help support the channel. You can use my coupon code BT to get the max discount at all times. I'm sure they're going to be putting out a new discount. Sometime soon. And so if you want the max discount at all times on Apex, use coupon code BT, beginner trading, BT. All right, why do I keep losing? So listen, a lot of people don't understand. So I heard somebody say, hey, how come every time I buy, stocks go down, and every time I sell, stocks go up? Is because look, here's the problem. Okay, I'm going to show you guys the problem. Is that, let's say you got a high of the day level right here. So let's say you got a high of the day level right here. Say the stock moves up, and here's the high of the day, right? Let's just call this the high of the day level right here, right? A lot of rookie traders are doing this, right? Where the stock starts to creep up. Oh, it breaks the high of the day. And so they say, oh, this is such a bullish sign. Let me buy right here. What do you think is going to happen right there, right? We're at the top of the range on this chart. We're at the very top. Experienced traders are taking profit here. They're selling up here. And so what happens is they buy this high of the day breakout, which is one of the worst strategies ever. And it goes like this. Fakes them out, traps them, right? They'll do this over and over again. They'll keep slapping the wall, doing the same thing over and over again. Where they don't change their strategy, they're just buying highs. It's the worst strategy ever. You're at the top of the range. Experienced traders are taking profit. Where instead of doing this, experienced traders typically do something like this, where you get a good, healthy stock, either goes like this, it's solid long-term trend, big, deep pullback. Experienced traders are buying this instead. They're buying that weakness because the likelihood, the edge, is that we're going to bounce back up. We're going to move higher. I like to do this, where we get a stock that goes like this. If it's a blue chip healthy company, I will buy that weakness all day. Because again, if I can hold it, usually we're going to bounce back at least a little bit. I did this with Target. I did it with Disney. I did it with a lot of different stocks. I did it with Meta after the last earnings report. It works really, really well. So that's usually why a lot of rookie traders get it wrong, in my opinion. But everybody's different. Everybody trades different ways. I can't say one is right or one's the. I'm sure some people can make money. I'm sure some people can make money day trading high of the day breakouts and stuff. I just was never that person. I think it's super difficult to make money that way. And even in day trading, I think this is true. Now we got Powell coming out live at 8:30 or at 2 p.m. The rate decision is going to be announced, and at 2:30, we're going to have Powell speak. The crazy thing here, let me end this poll and ask everybody else. Dude, honestly, guys, it's so weird to me, right? And again, it goes back. I have a little bit of OCD. There was a time where I was watching Major League Baseball games last year when Aaron Judge was breaking the National League record. And every time I'd put on a baseball game, the next person at bat would hit a home run. And this happened like 3 or 4 times in a row. And to where I told my wife, I was like, hey, this weird thing keeps happening. My wife and daughter were sitting in our bedroom and watching TV. And I was scrolling past it. I told them, I was like, hey, every time I put on an MLB game, the next person at bat hits a home run. It's very strange. And they were like, okay, let's test it. They stick on a baseball game. I think it was Taylor Ward. Yeah, Taylor Ward for the Angels was up to bat. And sure enough, very next swing, he hits a homer over the left wall. And they freaked out. They were like, what the heck? I was like, I know. I don't get it. Eventually, it stopped working. But listen, my point is here, I'm just in tune with the universe, okay? Top 3, best predictor of all time ever. We got CPI exactly right, an hour plus before the report. We told you guys 0% and 3.3%, which is actually pretty outside of what everybody else was expecting. I don't think I saw almost anybody post what we said here. So very strange, very strange. John, why mark it up? Inflation data came in low. Okay. Yeah, you might be right. American League record, sorry. I got it wrong. Powell said it would cut 3 times this year, so it has to be June. Baby me, you must be going by some old Powell. Like, here's the problem. You see people do this all the time. Here's the problem. Yeah, I mean, Matthew, number one, my inaccuracies about whether it was the American League or the National League and exactly how long ago it was is insignificant. I'm just kind of trolling the stream. Listen, I'm in tune with the universe, man. And you could be mad at that, and it's okay. Listen, if I was watching in your shoes, I might be mad at me too. Like, listen, I get it, man. It's hard to be wrong, And it feels good to be right, man. But no, it's all good. Nvidia up to 123s. Yeah, you're just not in tune, bro. Listen, I mean, your market intuition is sharpening. I honestly, I'm really just getting lucky. I would love to. On a serious note, I'm obviously being sarcastic. I'm really just getting lucky. Just getting lucky with guesses. We have 5% Powell cut rates today. Yeah, did it change? Did the percentages change? It's funny. Like, I'll tell people I'm the top 3 greatest of all time ever in everything in the world, right? Some people get so upset. They take it so seriously. Like, I'm obviously just trolling you guys. Sarcasm should be very self-evident. Nvidia just broke highs again, guys. So Nvidia rip it up over highs. We're at 123s. Yeah, so the rate cut percentages actually went up with better inflation data. So the rate cut percentages went up. We're at 5.7% expecting a rate cut now. This was like 99.5%. So this did spike up for today, for the June meeting. Yeah. Definitely top 3 most sarcastic ever in the world. Yeah. You buy groceries and clothes and tools. You're intuitively know more than you think. Yeah, I mean, listen, the best way I could describe it is I've got a brain like the guy in Limitless, okay? You know. Or the guy from Suits, you know, either one of those. I'm basically like that guy, you know. Top 3 greatest mind-querying things in the world right now, essentially, is what I'm trying to say. NVIDIA, rip it up. It's at 123s. Yeah, I'm like a mix of the kid from Rookie of the Year baseball throws mixed with, you know, Jordan Belfort mixed with Michael Burry when he was right about 2008, not Michael Burry in 2010s or 2020s. You know, that's me right here. Top 3 greatest. NVIDIA at 123. So NVIDIA's dragging the market up right now. NVIDIA's breaking highs. It's at 123s. SPY's at 541s. Gold is spiked up with the market. Like I said, most of the time gold follows the macro movement of stocks. NVIDIA is 7.73 PE. I think it's a little bit lower. It might be higher now that the share price is higher, but I think the PE ratio for NVIDIA is a little bit lower than that. I might be wrong, though. It depends on whether we're looking at forward PE or regular PE. Yeah, if he announced a rate cut today, it would be a shock, a jolt to the system. It'll be interesting to see. Right, it'll be interesting to see. Again, I think we might have choppy behavior now. It depends on what NVIDIA does. If NVIDIA continues to rip up, I'm not sure. Unsubscribing now. You used to be a humble guy, but now you're just a show off all the way. That's funny because I've never, ever seen you before, you know. Definitely top 3 biggest show offs in the world right now, though. I'm not going to argue that. You know, listen. When you look this good, you just got to show off, man. I mean, you know, it's the nature of things. Don't hate me, you know. Pitcher's got a big butt. Mixed with Akon from 06. Akon and Young Jeezy. Is tech still worth these prices? I'm not really buying up anything right now. Everything's too high, to be honest. I'm not really buying up anything. I've got a portfolio that's benefiting from these rips, of course, but I'm not buying up anything right now. Oh, I'm up big. What am I up big in? Home Depot. Okay. I didn't even look at my portfolio until just now. I'm up hundreds. You'll love to see it. NVIDIA, obviously, benefiting. Home Depot, benefiting from that. Nike, we're green on Nike. It took a long time, but we are now effectively green on it. Uber is green too. I'm going to take a little bit of profit in Home Depot. Home Depot's gapping up a heavy amount right now. So I'm going to take at least a couple shares off of this. All right, yeah, so we just took some off at Home Depot. NVIDIA, though, man, what a rip. How does pre-market work? You can only limit buy. Yeah, so pre-market, you can only use limit orders. Yeah, that's right, Justin. You know, man. GTFO crybabies. You know how it goes, man. Bro, how could I learn fundamentals from you, please? I will help you with whatever without asking in return. What about quantum physics and rocket science? Can you help me with that? If Jeremy, you're on a first name basis, huh? Jeremy told about cut interest, the market will be like that or not. Yeah, the problem is that people have to understand. Powell might have said something 4 months ago, 5 months ago. It doesn't mean it's true today. He changes his tune a lot. You see people all the time. Like, look at the Dixie. The Dixie is falling, I'm sure. The dollar index. I'm going to take a little bit off of some of these other trades, too, just to take some profit, just to lock in to be safe here, I think. But, yeah, you got to understand, Powell will change his tune a lot. So Powell will change his tune, a lot. He will change his tune a deep amount. He always describes it as a data-dependent approach. So he will change his tune depending on the data. So if the data shows up, if 1 month we show like a really strong labor market and inflation spiking, he will be very hawkish and talk about less of a need for rate cuts, more, hawkish decisions, predictions, outcomes, so forth and so on. If the following meeting we get low inflation data, a weaker jobs market, he might go more dovish and say we might have a cut. He might say we're more likely to cut rates, so forth and so on. And so it all is data dependent. And so what Powell might have said we would cut rates 3 times this year 6 months ago. That is completely irrelevant to what happens today and what he is expecting today in this Fed meeting. And so again, you gotta watch meeting to meeting. You can't go by something he said 6 months ago and act like that's gonna happen, because he will change his decision making, his plans, his predictions for markets and the economy, and that's something you gotta watch and make sure you pay a lot of attention to. Keep on track with it, I guess. Catch it back up in the chat. Yeah, we're almost certainly not going to cut rates today. Yeah, we're almost certainly not going to cut rates. How can I learn fundamental analysis? Just watch the live stream. That's all you got to do. I don't do mentorship program or anything like that. I don't charge for it. I'm not even claiming to be a good trader or a good analyst or anything like that. Remember, I'm one of the top 3 worst analysts in the world. Nothing here should be taken as truth. I'm terrible and have no idea what I'm talking about sometimes. I might be wildly wrong about anything I say. It's entertainment only. I do trade off stream. You're not going to see all my trades. Understand CFTC 4.41, hypothetical or simulated performance have limitations. Don't copy me. I'm not an investment professional. I'm also not going to be a mentor outside of the live stream. We can hang out on stream. I'll do my best to answer questions if you have them, but I'm not going to mentor you at all or anything like that. I just don't have time to do that. Hey, thank you. Does Connor and Michael Chandler happen? I hope so, bro. I don't think it's going to, personally. The other theory is that they could just be doing this to build hype, right? So they could just be doing this to build more hype because it's been a while since Connor fought. And, all right, so gold just broke highs again. SPY's still moving up. Is Nvidia still pumping? But, yeah, they could be making it up in the air to build hype for it. The rumor is that they're asking fighters whether they could step in. But again, if they're not going to get Conor, nobody cares about Chandler. No offense to Chandler. Chandler's great. I used to watch him when he was in Bellator. I thought he moved over to the UFC a little late, but he still did really well in the UFC. But, people are tuning in for Conor. People can say whatever they want, but people watch Conor. Some people want to see him get knocked out. Some people want to see him knock people out. They're both paying. And so that's kind of the Conor McGregor effect. It sucks because he's the first to say we need time and it's a long road, but changes his stance. Yeah, I mean, he does change his tune a lot. You're just kicking it with the bros. Definitely. Top 3. Mate, can you explain if Fed rates are increased or decreased, how would it affect the market? Okay, so the market's response to rate decisions is, up in the air. Nobody knows how the market's going to respond to different rate decisions. That's the first thing. Nobody knows how the market's going to respond to different rate decisions. It depends on what the market fears. If the market fears the economy, here, we're going to end this poll. We got 5,000 votes. We're going to do another poll. If the market fears inflation, right, the market's going to want higher rates. A cut might signal more inflation problems, and inflation can really spiral out of control if the Fed cuts rates too early. If the Fed decides to cut rates early, the inflation can snowball and domino and fall and skyrocket really quickly and go up really fast, right? That's essentially what happened after 2020. The Fed stepped in, they printed money, they did QE, they sent out stimulus checks. The consequence of that behavior was inflation spiking up to almost 10%. And that's what people are really unhappy about to this day, is the inflation rises. And so people act like we're in a recession or depression, and we're not. And they use that to argue cut rates, but we shouldn't cut rates. We should keep interest rates as high as we can for as long as we can, because inflation has gotten so bad over the past 5 years. I'm not saying it's bad. Month to month, this report was good. We came in at 0%. But we got to look at the previous months as well, and we can't use 1 month's report to jump to cut rates. And so if the market fears inflation, it doesn't want rate cuts. If the market fears economic weakness, too little jobs, too high of unemployment, recessions, depressions, that's when the market's going to want a rate cut. But I don't think we're there yet, and I think we should continue to keep rates high until we are there. And then we should pivot to rate cuts. I hope that makes sense. We're going to do a poll. When does the Fed cut rates? Today, we're going to do July, September, later than September. All right, so when does the Fed cut rates? Today, July, September, and then later than September. Vote on that poll. Let me know how you feel about rate cuts. What do you think of the housing market? I think the housing market's in shambles, but I think that's kind of what needs to happen until inflation can really get under control. Right now, mortgage rates, the Fed's keeping interest rates high to combat inflation, and so it's expensive to get a loan right now. The conventional appeal of real estate has gone out the window because, again, the conventional appeal is you can buy a home through a mortgage, pay less than you would in auto loans, or pay less than you would in rent, but actually own your home as long as you can put a decent down payment. That's not true anymore. In fact, you're going to pay much more to mortgage a home than you are going to be in rent at this current state in real estate. So again, real estate's not great. But yeah, I still don't think it's time to cut rates. I think we need to let it cook a little bit and inflation to go down. Yeah, so I'm looking at GameStop. There's gold. Here's Nvidia on the right. Nvidia's still sitting at 123. Here's GameStop. GameStop didn't really move much with the inflation report. GameStop's kind of flat on the day. It's under 30 and just dipped down some. So we'll see if it holds. Hey, how you doing? All right, guys. And vote rate cut might be seen today. I don't think again, we had lower inflation data, but they've already made their rate decision today. And so it's super unlikely that we're going to get a cut today. It's possible, though. Nothing's ever 100%. Like, we always have possibility of things, but we shouldn't cut rates today based off of one good inflation report. Yeah, so again, inflation data showed up lower than expected today. That's good. I'm watching Nvidia. I'm assuming we're going to get choppy behavior leading into this report, though. So there's gold on the left. GameStop down. SPY still over these levels. And again, SPY has to open up to break lifetime highs. So we're not going to technically break lifetime highs until we open. It would seemingly go against logic to cut rates today. If the economy is stable, it wouldn't make sense to make such a drastic move either way. I think later on in the year, if not next year. I typically agree with that. For the most part, I agree. We love it. We love us. For the most part, I agree. I don't think, again, you get a lot of pressure from real estate and mortgages and lending community for rate cuts. And I get why they wanted to cut rates because, again, a lot of their business depends on lower interest rates, right? But that's not always the case. You're not always going to have low rates. And I think it's important. Look, I know running a live stream like this, I've just heard from so many different people how unhappy people are about prices being too high. Prices are too high. Prices are too high. How are we affording things? They say the unemployment rate is only low because people have to work a bunch of jobs to be able to afford things. And if that is true, rate cuts should be pushed back as long as possible. We need to stop trying to just always have a super thriving economy, because if we keep it like that, if we keep the economy too strong all the time, the consequence is going to be rampant inflation. We're going to have so much inflation that happens that pretty soon we're not going to be able to afford anything if that happens. And so to keep a healthy economy, there needs to be balance. It can't always just be super strong economic growth, super high GDP, super low unemployment, super high payroll numbers. We need to have balance in that situation. And so if inflation is getting better, great. I still don't think we should cut rates. It's better, but we're still at 3.4%, 3.3%. And so we're still way above 2%. And I think if we want to get anywhere close to 2%, which I think is going to be hard to do, we need to just be very patient. Well, that was the last option, MJ, the past September. Yeah, oof. Intel. So we are rising on Intel. We finally made some money back on Intel. I'm going to take some profit here because I can. Yeah, so we just took some profit in Intel. You love to see it. We're going to get ready to day trade some as well, chat, so stick around. Why are we seeing gold rise if the news are good for the economy? Because gold's following the macro markets. Yeah, it's not necessarily good for the economy. It's kind of ambiguous there. It can be good or bad for the economy. Technically, if we're talking about specifically economic growth, higher prices and higher consumer prices might signal stronger economic growth, right? But that's not what we always want. The Fed plays two sides. They got to balance the economy. If we're at risk for a recession and depression, they should lower interest rates. They should cut rates. They should bring short-term interest rates back down. If we're really at risk and it's an urgent thing, then they can do more QE and money printing to try to save it. If inflation is the risk, then the Fed steps in and they keep interest rates high like we're doing now to try to combat that inflation, because if people are spending more money on interest and lending, they typically spend less on other things. If mortgages are 7-8%, people are going to have less money to spend on other things, and so by keeping interest rates high, it discourages spending, it combats inflation in that way. And so their job is to keep it balanced, and so cutting too early could lead to inflation spiking and snowballing. But who knows? It is an election year. That's one of the reasons I bet that inflation would be at 0 and we would have 3.3% is because it's an election year. I think they're going to do everything they can to make sure everything's stable. And so I think and we've already seen drastic inflation spikes. And so that's kind of why I bet on the 0% and 3.3%. And again, we got it exactly right. I'll have to clip it, but yeah. What are your thoughts on American Airlines? I'm kind of neutral on it, Brock. I don't know enough about them as a company. I like United a little bit better as a stock. So I tend to like, United Airlines as a company a little bit better. Is United Airlines still a company? UAL. Yeah, there it is. Yeah, I typically like United a little bit better. John, are you suggesting the numbers are fudged? No. I'm suggesting that economists at the Federal Reserve are going to do everything they can this year to have a balanced economy. And they're going to get pressure from, both sides to do different things. Nvidia bouncing all the way back up some here, so check out Nvidia, guys. 123.20. So Nvidia testing the top. This might drag the rest of the markets up. Yeah, but the economy and the markets are different things, right? So again, that's why I always ask, what does the market fear? If it's inflation, then lower is better, higher is worse. If it's recessions, then higher is better, lower is worse. So right now the market still fears inflation. That's why the market's reacting positively to this report. This is why, listen, I'm going to tell you guys the biggest mistake I see traders make on a regular basis. And sometimes they end up lashing out at me on this live stream. But what I typically see is you see people that maybe they're biased politically. Like maybe they got, they want the market to crash because they dislike one political side or whatever it is, right? I'm very neutral. I'm not picking sides. I dislike both sides pretty evenly, to be honest. But they let that political bias cause them to always think the market's going to crash. They constantly think the market's going to crash. They constantly are bearish for these big economic reports, these big meetings, these big inflation drops. They're constantly bearish. And then whenever, and sometimes the market does react in a bearish way. Sometimes we do get a negative response to this stuff. But they're so tunnel vision towards that bias that they have that when we do have positive reports like this, which again, the Fed does a good job of keeping things balanced. That's how I'm able to guess these right a lot of the time. If I do have an edge, which again, I think it's pretty much luck. But the edge I do have, I think it's just balancing. Like I look at a balanced number versus what we've shown previously. But sometimes when we do get these inflation reports that are positive and the market reacts positively to it, I think it's really hard to accept that because they get so tunnel visioned on the market's going to crash, the market's going to crash. I think sometimes they're just influenced by YouTubers and other influencers who constantly tell everybody the market's going to crash. And usually they're wrong and they upload a bunch of more videos. They either scream manipulation or they end up just uploading a bunch of other videos trying to dilute the wrong prediction that they had. And then they'll tell you the market's going to crash the next big FOMC meeting or whatever it is. But I don't think you can be too rigid in economics. I think you have to kind of take the data as it happens. If you get too one-sided, if you get too rigid in your outlook, you're going to lose money. You have to be able to flow with the different things that occur. Nobody's always right, except for me. Everybody's always, it's all probabilities, and there is variance, I guess is the point. Variance is real. Nobody's going to know exactly what's going to happen except for me. And, yeah, you just got to understand that and be loose with it, not be too stuck on one specific thing. I am new and looking for penny stocks. Can someone give me some names, please? Do not invest in penny stocks accounting. Penny stocks are terrible. Most of them are scams. You should never invest in them. Again, there's a big misconception that penny stocks, that all these healthy companies just start off as penny stocks and then they grow into the blue chip companies they are today. That is not true at all. Most healthy companies were never penny stocks. They're never going to be penny stocks. If a company has found themselves in the spot where they're a penny stock, they did a lot of things wrong and they're probably going to fail. And so you're burning money investing in penny stocks, and there's a lot of media and marketing that try to talk you into investing in them like there's some type of huge edge. You're going to lose money. It's much better, even if you got like a $500 account, it's going to be much better to just invest in blue chip stocks with only a couple shares. You're probably going to make more money. The edge is going to be much more pronounced investing in blue chip stocks, just buying less shares than buying 500 shares of a terrible penny stock. But again, the marketing that's out there for penny stocks, like you got to think of the Wolf of Wall Street, selling garbage to garbage men. Is the way he described it, right? And again, they do it. They're selling you a story. They're acting like you can 1,000x your money and all this crazy stuff, and they're pandering to gamblers is what they're doing. But again, if you invest in penny stocks, you're almost certainly going to fail. If I handpick 5 different penny stocks and invest into that, in 5 years, all my accounts mostly going to be gone, right? If I invest into 5 random blue chip stocks, in 5 years, I'm probably going to be up money. right? And that's the differences in edge between investing in those two sectors of stocks. Look, a lot of new rookie traders get wrapped up in the penny stock game. It's a scam. Like, you're not going to make money investing in penny stocks. You're probably going to lose money. Most healthy companies IPO and they're immediately, $10, $20, $30 a share. They're never penny stocks, even if you look back, like a lot of people bring up these other stocks that they say were once penny stocks. Like Amazon was never a penny stock. It's just split so much since then that when you look at the historical prices, it shows like a $1 stock or a $2 stock, but it was never that price. This is a post-split price, which means they've chopped the shares up into smaller pieces because the price got so high. And so it influences how the history of the chart looks, but it was never a penny stock. So again, you're not going to find the next Amazon in penny stocks almost ever. Anyways, Thoughtful Project. Hey, thanks so much for the donation. He said, thanks for the morning. Good stuff. Great advice. Hey, thank you, man. I appreciate it. Yeah, I mean, Kevin saying, I have more money than you, your wife, your kids. Listen, man, you sound hella emotional, which usually means that what I'm saying is the truth and it hurts. Deep down, Kevin. Deep down, what I'm saying is the truth. Sometimes the truth hurts. And again, sometimes people lash out at me because I'm trying to be honest with them about it. And I think if you spent so much of your time and energy learning how to invest in these penny stocks, say you spent a year learning this stuff, and then, top 3 greatest ever, John shows up here and starts telling you, hey, you might have wasted that time. That might be a really hard thing to look at objectively and accept. And so, hey, it's all love here, man. Do what you got to do. I'm not saying you can't day trade penny stocks. I'm not great at it. But if you guys want to day trade, do your thing. I'm not mad. Maybe you can make money. But yeah. Penny stocks are mostly a scam. They're a sucker's bet, is what it is. They're something that rookie traders get wrapped up in. They become susceptible to marketing. Like, hey, you can get rich. You can buy 1,000 shares of this stock, and it's gonna moon. Here's a fun way to test it. Go back to all the YouTubers that once told you that these penny stocks were going to go up crazy percentages. Go back and look at them and tell me and check their stocks. Check the penny stocks that they're talking about and see what the price is now versus when they told you to buy it. And you're going to see that almost all of them are down freaking 95+%. FOMC, yeah. Yeah, again, Kevin, listen, I know you're mad. I know you're saying you've got more money than whomever or whatever. Again, I would advise you to, I know the truth hurts, brother. I know the truth hurts. I know you might have spent the last few years investing in penny stocks, hoping you're going to get rich. Again, I'm here to tell you, you're probably wasting your time. Smart people recognize their faults and correct their behavior. Again, do whatever you got to do. But I know there's no edge investing in penny stocks, really. Not any real significant edge. Certainly not more than investing in like the index funds or anything like that. Are you saying shorting penny stocks is free money? Well, I mean, I wish it was that easy. What short traders are doing, when you short something, right, you're borrowing those shares from long-term investors who don't care about short-term price fluctuations, right? So when you short something, you're getting it from long-term investors. You're borrowing those shares. It's essentially like going up to your neighbor, asking to borrow a $1 bag of sugar, taking that bag of sugar, selling it, putting the dollar in your pocket, waiting for the bag of sugar to drop to 50 cents, buying it back, and then returning it to your neighbor and keeping that 50-cent difference, right? That's essentially what shorting is. And your neighbor, in this case, is long-term investors. You can't short most penny stocks. There's something called HTB, which is hard to borrow, or NTB, which is none to borrow, right? So I wish it was that easy as just finding penny stocks to short them. But the problem is that you're not going to be able to locate almost any shorts on penny stocks because of that reason. Why? Because there's not that many long-term investors. Because again, long-term investors with money are usually smart, and people that are investing into penny stocks long-term, I'm not saying they're not smart. I'm just saying, well, they're usually newer. They don't live that long in the markets to loan out shares or anything like that. So, yeah. Yeah, I'm trying to see. All right, so Pawn is saying that Apex right now has $35 resets and 71% off. Let me try to reset. Let's test this theory. ATF stats. I hope it's correct. Dashboard. Reset. What is this one? I cannot reset. What? I don't even know if it's letting me reset right now. Let's try. I think Rhythmic may be down. Let's see if it's right. 36. All right, I'm testing the reset thing. There's somebody saying $35 resets. If that's true, that's very cheap resets, and 71% off is what I'm seeing. Ooh, so it is $35 resets right now, and I believe it's 71% off is what the current sale is. So again, let me try it out one more time with something else. So again, I think Apex right now has $35 resets, so pretty cheap universally, right? So if you got more expensive accounts, I think it's $35 resets. And then let me try the 50K challenge. And then 70% off is what I'm showing here. All right, guys, look at GameStop dip. NVIDIA still consolidating at the top. Let me see. I just don't see an announcement from them, but we do have $35 resets on Apex universally for all platforms, so that's good. Okay, so sorry, I'm testing this now. Yeah, okay, so it's 70% off Apex accounts right now. So for the time being, you can get Apex for 70% off, and you get $35 resets. Yeah, I'm in Intel right now. We're making money on it. So again, Apex, again, if you want to learn to day trade, almost all day traders lose. I'm very transparent about this. Most day traders lose. I lost like $4,000 in the beginning when I first started. Almost all day traders lose money. It's not just me. This is almost everybody. And so if you put up $5,000 in the beginning, I'm here to tell you, you're probably going to lose that $5,000. You put up $10,000 in the beginning, you're probably going to lose that $10,000. It makes absolutely no sense for a new trader to risk thousands of dollars in the beginning trying to day trade. Go to the futures market if you want to learn to day trade with, with less risk. Go to the futures market. In the futures market, you can day trade essentially the SPY price action. You can day trade this price action right here. If I look at the E-mini on the right versus the SPY on the left, it's the same exact price action. Like, look. Here's the SPY. Okay, and then here's the S&P 500 futures contract. This is actually what the SPY tracks, right? It's literally the same thing. Like, look, this is the same as that, right? It's the same thing, but I can day trade this right side in futures, no PDT roll. I can do the same thing with the QQQ and the NASDAQ here. There's the QQQ. Here's the NASDAQ futures contract. Same thing. I can day trade this right side with no PDT rule in futures. I can buy market, sell market. Very similar to day trading stocks. No PDT rule, but the patterns are very similar, right? In futures, these funded account programs are allowed where they give you a demo and they test your skill with the demo account first. If you can pass that test with the demo, then they fund you between 25K up to 300K with a 90% split. So if you take that account and you make 20K, you get to keep 18 of that, which is 90%. They keep 2 since they're funding you that money. And they've paid out millions of dollars. They paid out almost $200 million to their traders. One of the most legit ones in the world. Again, right now they're 70% off and resets are only $35. And so if you take the challenge and you lose, you can reset it for $35. Right now, the base one, the 25K challenge is only, let me see what the 25K challenge is. So the 25K challenge is 147 times, what is it? 30%, so times 0.3. So right now, the 25K challenge is only $44 and it costs $35 to reset. And so right now, your risk, if they give you a 25K demo, if you can make 1,500 without losing 1,500 and following their rules, they fund you 25K with a 90% split. If you lose, you're out $44. You can reset it for $35. Very cheap right now, very cheap. Great way to learn how to day trade, and you're still risking something, right? It's teaching you how to trade under pressure. I think most day traders lose. I think you're probably going to lose day trading here as well because most day traders lose. It doesn't matter where you go. A lot cheaper to lose here than to put up the money yourself and risk that and probably lose it. So again, if you want to check it out, here's the link. Great way to help support the channel. There's the link right there. Check it out. Oh, wait. Let me delete this. Sorry, this is my old link. I got to fix it. This is the old one. All right, here you go. There's the link right there. Again, if you want to check the link in the description, you use that as well. The Fed meeting is at 2 p.m. or 2:30 Eastern Standard Time today is when the Fed speaks. Did the odds for a July cut go up? Probably. Almost certainly the odds did a little bit. The odds for a cut today went up, you know, but it's still unlikely we're going to do it today. So again, here is... Wait, this is super weird. So look, so the odds today, right? The odds today went all the way down. So now 99.9% of people are expecting a pause again today. 99.9% of people are expecting a pause. Now, after this inflation data, we have 0.1% chance of a rate hike today. So it pivoted from a 5% chance of a cut to 0.1% chance of a rate hike today. Rates going up. Super unlikely though, but yeah, almost certainly. That's weird. That's the opposite reaction, I would assume. Here's July. So July, everybody's expecting... wait, let me see. Where are we at right now? All right, so January, February, March. Yeah, so 5.25 to 5.5 is where we are, which is right here. So yeah, so in July... we got a 16.5% chance of a pause now, 84% chance of a rate, we have an 84% chance of a pause, a 16.5% chance of a 25 basis point cut. In September now, we have 62% chance of a rate cut, 27% chance of a pause, and 11% chance of a 50 basis point cut. All right, guys, we got 10 minutes. 10 minutes. Also, guys, if you haven't already, one of my other sponsors. I'm not trying to plug too much, but I didn't plug anything for the first like 3 hours of today's stream. So forgive me, you know, shameless plug here. Let me sell out real quick and plug some of my sponsors. Great sponsors. And again, everything we do here is free. We don't charge for content. We don't sell a course. We don't claim to be good. We just kind of give free economic reports and data to traders. It's one of the reasons we get thousands and thousands of people here. We had 5,000 people here earlier. When inflation data showed up. And now we're going to get ready to day trade financial markets. But again, like check out Chart Prime. Chart Prime's powerful. You know, Chart Prime is powerful. Let me show you how powerful it is. So here's Chart Prime today, right? So here's Chart Prime. It's a trading view service you can use in stocks, crypto, Forex, futures, anything with a symbol, you can use it. It's a great way to learn how to day trade, right? Like, let's go back to this level here. Like, look, we have this strong level here. So let's just test it really quick. So they give out these custom buy and sell signals. Look at the strong signal showing up here. Literal days of green action. That was yesterday. Very powerful. So that's one. Sell signal here. You got a little follow through. Strong buy signal here. That looks like it bounced. This one looks like it failed. Strong buy signal here. Looks like you got a nice little follow through. Sell signal there worked. Look at this strong buy signal here that worked. So out of all of these, and again, I can't guarantee this is going to work. I can't guarantee these are accurate either. But these, to me, this is what it looks like. 1, 2, 3, 4, 5, 6. 1 out of 6 didn't work, which I think is this one. This one's probably a little bit up in the air. But even the rising wedge worked on this inflation data breakout here. So again, you can use this with anything with a symbol on TradingView. It's like 40 bucks a month. Test it yourself. Powerful. You know, again, you can use it oscillators, back testers, screeners, anything with a symbol. I like using it to get funded in these future challenges. You know, works really well to get funded on these future platforms. And so again, if you want to check it out, you know, look, we're up about 165 today. We're going to get ready to day trade on Apex, a funded account program in futures. CPI numbers came in at 0, 3.3%. What was core and what was core expectations? So CPI came in at 0% month to month, 3.3% year to year. Core data showed up at lower than expected by 0.1% as well, right? So expected was 3.5% year over year for core, which excludes food and energy. They showed up at 3.4%, 0.1% under expected, and lower than last time, which was 3.6% for core. Core CPI month over month was expected at 0.3%. We showed up at 0.2%, and last time was 0.3%. So we decreased 0.1% month to month, as well as 0.1% under what was expected. Regular CPI came in at 0% versus 0.1%, so 0.1% under expected month to month, and then year to year came in at 3.3 versus 3.4% expected, and then last time it was, let me see, hold up. Yeah, I'm trying to look at the core year to year, but yeah, we decreased about 0.1% everywhere, month to month, under expected, under last time. Yeah, so there's the FOMC meeting is later on today. And again, we're going to stream that fully live like we always do as well, chat. So it's a big day. But yeah, I appreciate the donations, brother. Thank you, man. What's the difference between day trading futures and crypto? Futures was originally a commodities exchange. A commodities market, I should say, not exchange. There's multiple different exchanges, but it's a commodities market. Right, so in futures, farmers would grow crops. I tell this story at least once a day, but it's good for traders to understand like the roots of futures, pun intended, I guess. But no, so futures were created by farmers originally because they would grow crops, and when it came time to yield those crops, they would lose money because the prices of the crops would fluctuate by the time they yielded the crops they were growing. So they started selling contracts to speculative investors, and they called them futures contracts because they were betting on the future price of a commodity. Now futures has evolved, though, to a point in which you can day trade the S&P 500. You know, you can day trade the NASDAQ 500. You can day trade gold and trade all these different things in futures, not just conventional crops. You know, but you can trade crops as well. People trade oil, they trade cattle prices in futures, right? But it has evolved to a point where you can trade the S&P, the NASDAQ, you know, you can trade gold, and some places they let you trade currencies. All right. Yeah, I'm gonna stream the Fed meeting. Today's the day I decided to leave my job to day trade after 4 years of learning. 1 year making money, 1 year losing money, 2 years studying. Now I'm ready. I mean, just be careful, Gary. I'd never really recommend people leave their jobs. The only way I would leave my jobs to try to day trade is if I have a couple years of salary saved up. Like if I got like 100K, you know, and I could effectively do whatever, then that's a different story. But good luck, brother. I hope you do it. I hope you make money. Just be careful. All right, guys. So we are hanging out. Let's see what we get. Data dryer open and happen in about 3 minutes. All right, guys, so we're up a little bit on the day. Again, I'm betting we're going to get choppy behavior, though, so we're going to look to attack a range. If we move back to the bottom of the range, I will buy this dip. We're already up about 150 bucks on the day, so we will take one position here and then maybe add to it. Looking to just attack choppiness into the opening bell. We'll add one more to this. Oof, just getting punished. So you can see how fast futures can move against you. All right, guys, we got 2 minutes left. I'm gonna have to cut this. We're kind of retracing on the way back up. Weird. A new candle about to open up. Yeah, I'm gonna have to cut this. It's just dipping too fast. So we're gonna take our small little loss on the day. This is a newer funded account that we activated yesterday. My other funded account, we're in the process of putting in a withdrawal. Hey, congrats, Robert. Thank you, brother. Congrats, man. Okay. Hey, yeah, y'all be safe. Hey, good luck, Gary. I hope you make some money, brother. You know. What I would advise you to do, Gary, is I would diversify not just into day trading, but also into long-term investing and swing trading. A hedge. You know, the big edge is long-term, right? And you're not always going to have bull markets, but if you hedge, you know, there's an opportunity to make money on both sides. And, you know, your gains and swing trades and investments can kind of pad your losses in day trading, you know, and vice versa. So that's what, again, I'm not an investment professional. I have no idea what I'm talking about, and I might be wildly wrong about everything I say. Don't copy me. I do trade off stream. You're not going to see all my trades. Understand CFTC 4.41 hypothetical or simulated performance have limitations. I'm top 3 worst trader of all time. Don't copy me. Yeah, did I get everything? I think I did. Anyways, 30 seconds, chat. But why do you say day traders lose money then? Because they do. A large majority of them do. Not all of them. You're going to have outliers, but most day traders lose money. You know, anybody that's day traded for 4 years would understand most day traders lose money. All right, guys, we got 5 seconds. All right, guys, ding, ding, ding. There is the opening bell, chat. Yeah. Hey, good luck, Gary. All right, guys. GameStop moving up a little bit at the opening bell. It's at 29.40. It was over $30 for a split second. Now we got big dips at the opening bell. Profit taking is occurring. All right, we're going to take a risky bet and buy this dip. And we will add one to this. Kind of flat. Again, you got to take risks in these funded account programs. I'm trying to let this work. All right, we just took half off, locked in some profit, looking for a resurgence back up. Got a little cushion now to let it work some more, cook a little bit. There we go. Boom. All right, so we just made all our money back. I might buy this dip again. I missed out on the bigger bounce back, but that's okay. Nvidia's shooting up, bouncing back up too. Again, I'm probably going to attack choppiness. Look, a complete resurgence all the way back up, chat. Nvidia at 123.50, so Nvidia is pushing. Ooh, Uber. Should I take some more off an Uber? We waited long enough for Intel to finally make money. It took a while though. We're green in Shopify as well. Roblox are still pretty green. Palantir were nicely green. Nike were finally green too. It took a while. Home Depot for the win. Yeah, Home Depot, man. I already took some profit on it this morning. Look at Nvidia's shoot up. Nvidia just broke lifetime highs. Or I think, let me see. It might not have been lifetime highs. No. See, this candle skews it. I got to get rid of this. Yeah, so I moved that bar. So the high of the day is 125.59, so we're not anywhere close to that. All right, though, but Nvidia's starting to break highs. Highs of the day, that is, not lifetime highs. Yeah, Apple. All right, guys. So again, we're letting the market calm down a little bit, but huge rips at the opening bell. If rate cuts, the market will rip up. I don't necessarily think that's true. I think it could go either way with rate cuts. I think it depends on what the market fears, and it's certainly not definitive. Like, it's certainly not a certainty that the market's going to go up with rate cuts. The economy and the market are different things. What else we got? All right, guys, so we're pushing towards highs. I'm gonna short this. All right, we just made about $120 very quick. Didn't get the best fill, but we're up about 80 bucks on the day. Shorting the top. We covered pretty quickly. I saw Nvidia start to turn, so. Yeah, I don't think you have to know about futures and all that stuff to be a day trader. I think you can day trade whatever and still make money, you know. And so, yeah, I don't necessarily think... I'm going to short again. All right, we're just going to go and cover that really quickly. I don't necessarily think you have to be super knowledgeable about all markets to be profitable in one. I think everybody's different. People like trading different things, and, you know, that's okay. Strange that gold is ripping on lower CPI data. Not necessarily. I think gold follows macro markets most of the time. And so if gold's ripping up, the S&P can rip it up. Not always. It's never 100%, but typically that's the case. And so if we get lower inflation data and the market rips up, gold follows it a lot of the time, you know. This is so annoying. I keep choosing the right direction, but it goes to stop me out every time and then reverses instantly. I need to sell to save the account. I mean, I'm not giving you advice. I have no idea what you should do, and I'm not an investment professional. I'm not liable if you lose money. Always make your own assessment, trade responsibly. No idea what you should do. But if that keeps happening, what I would personally do is I would lower my share size and loosen up my trades to take longer term trades. You know, you might be trading too large, to be honest, so that you're getting more emotional about smaller moves and you're getting chopped out. You know, that's what I'm assuming it is. Okay, guys, so I just got an update. I got an update on Apex promotions right now. So I got an update on the Apex promotion. I think, let me see. I think the 250K challenge. Let me see, rhythmic. Let me try this. I think the 250K challenge. I'm trying to see how cheap you can get the 250K. I know all resets are $35 universally. I'm trying to see how much the 250K challenge is. Okay, so yeah, the 250K challenge is the same price as the smallest challenge. It's $50. It's $48 basically for the 250K challenge. So they do have a deal. Yeah, so yeah, the 250K challenge is only $48 right now. So again, if you want to check out and get the 250K challenge, yeah, you can reset for $35 universally. I'm in CRM right now. 40% of people saying the Fed will cut rates today shows me the kind of audience that's here. Yeah, I mean, I think that's more confirmation bias. I don't think people actually believe the Fed cuts rates today. If they do, they're desperate. Again, I think a lot of people are, great show as always. I think a lot of people are desperate for them to cut. Like real estate professionals are really the ones that want rates to go down. My mustache is itchy. Real estate professionals want rates to go down because, you know, again, it's hard to sell mortgages and real estate with 8% mortgages. You know, nobody wants to buy that. So everybody's kind of avoiding that, and nobody really wants to buy it. All right, I'm going to short the market here again. We're going to take some size. There we go. We took half off. Boom. All right, so we just made in futures, and again, this is futures on Apex. We just made $200 on the day. Not too bad. You can see we're kind of scalping these moves. My plan is to trade chop. Remember when Apple was 165 and it was trash? Yeah, bro. Honestly, the bears get so emotional, man. They get so emotional. They're much more emotional than longs because I think my theory on why bears are more emotional than long traders is because they have less time to make money and they know it, right? If I'm wrong about a long position in blue chips or index funds for that matter, I can sit on it and eventually I'm going to be green if I sit on it long enough. It might take me years, but eventually I'm going to be green. Bear traders are the opposite of that, where the longer you sit on a short position in blue chip stocks, the less likely you are to make money long term. The more likely you are to lose money long term. And so I think that time decay on short positions, for lack of a better word, even though that's kind of an options slang, or that's kind of an options word, I think that time decay makes them a little bit more emotional. AMC ripping up, breaking highs, and I'm not against you bears. I've always said I think the biggest bear argument right now is that if Nvidia makes a massive correction, if Nvidia makes a massive correction, then it's possible we get a crash. We get a massive correction. If Nvidia drops to $700-800 a share and the rest of the market follows it, that's the biggest argument for a crash, in my opinion. And I think, we have some parallels with the dot-com crash, right? The internet was that next thing. The internet, the dot-com hype was real and it was valid because the dot-com, the internet 20 years later obviously is massive. It was that next big thing. But we still had a crash from it. And so I think that's the biggest parallel. I'm not saying that's going to happen either. I'm just kind of throwing out possibilities. Again, my whole thing is I try not to be super like rigid with what I think. I think a lot of different things could happen, and I'm just kind of got a front seat view of it. I just want to see what happens. I think, again, the biggest mistake traders make is they're too rigid in terms of like the economy. Like economists, like retail economists are a little bit too rigid in how they view things. Like they think it has to go one way, and if it doesn't, it's, they scream and kick about it. But I think you got to be loose. You got to understand there's multiple different ways things can go, and you can't be too stuck on one like you're always right. That's just ego. You got to understand you might be wrong. The best economists in the world are going to be wrong about things. So, Nvidia breaking highs right now. Nasdaq's flying up, dragging highs, or dragging the stock market up. I think AI really is that next big thing. I think it's crazy useful. It can query anything very fast. It's gonna now. AI is gonna allow an exponential growth in production of technology. Is what it's gonna allow, and we're already seeing that. People are gonna be able to produce technology much faster, much easier than it's ever been in the history of the world using AI, and it's only going to get better. We're only about a year and a half into when AI, the boom happened. Imagine where we're going to be in 5 or 10 years. It's going to be crazy in 5 or 10 years. That's when we're really getting on par with like sci-fi movies, to be honest. And so it'll be a really interesting next decade with AI. But it really is that next big thing. And AI stocks are prone to be massive successes, even if they correct or we have crashes or corrections. Look at the NASDAQ still fly up here. Wow. Very strong market. $15 years for Microsoft to recover. Yeah, 15 years. Listen, again, the dot-com crash was one of the biggest crashes. Again, it's possible. But I think people are too rigid. It doesn't have to happen. That's what I always try to tell people. Like, no, nothing has to happen. Crashes, we've already had a major correction in 2020. So 2020, we already had a pretty big correction where over the span of like 5 or 6 months, the S&P, the NASDAQ dropped like 20+%. So we already had a pretty major correction in 2020. We had a pretty major correction a couple of years before that as well, right? So acting like every other day we're going to get a market crash usually stems from a bias in terms of political bias. It could stem from like, an example is like you get preppers that kind of like not want the world to struggle, but they kind of want to justify all the time and energy they put in. A similar thing happens there where people, maybe people miss out on the big runs and, in turn they want to justify missing out on it. So they hope the market crashes. Maybe they have short positions. There's a lot of reasons, but again, I just don't think you can be that rigid with it. I'm not even saying we don't crash, but I think if you're following somebody that every major economic announcement, they tell you the market's going to crash and they've been wrong every single time, you want to just kind of reconsider who you're watching or who you're following. Because I do see some big time influencers with millions of subscribers. Every major economic report, they tell you the market's going to crash. So you can follow somebody that's just trying to get views or follow somebody that's actually honest with you about it. And I mean, listen, we got it exactly right today. An hour and a half before CPI dropped, we said 0%. 3.3% on the year, and that's exactly what we showed up as. Again, I'm going to keep bringing that up. Y'all will never hear the end of it because I got it exactly right. Again, but I will admit, as hard as this is for me, that it was mostly luck. Top 3 luckiest traders of all time ever. Aren't you in real estate? I have my license. I think I do. I don't know right now. My license might not be active. I don't know. I definitely have my license, but it might be inactive as we speak. I'm not sure. I have to go check. And again, if you find yourself betting against the market long term somewhere, you've been misled. We haven't had a real crash in 15 years. Yeah, but I mean, define real crash. Like, crashes aren't really the most significant things. Corrections are a lot of the time. Like, even if we look at the dot-com crash back in 2000, that was more of a long-term correction than a crash. We had a bear market for 4 years in that period of time. So that was just a long-term bear market more than it ever was a crash. We didn't really crash there. Again, it's just a long-term bear market. If we want to look at crashes, you could look at like 1987, like I could pull this chart up. And again, if we want to look at crashes specifically, pull the S&P up here. We look at like 1987. This is a crash where we just get deep 20+% drop very, very fast. Usually it's signed by a move back up. We also got one, what was this? In 98, we got the little mini crash before the big one. But again, this is more of a correction than a crash. This is a long-term bear market is what this was. But again, outside of those, like, 15 years isn't necessarily a crazy amount of time. That was like the second biggest bear market in history. Outside of that, I mean, so once we broke the previous highs, it took about 20 years to rebound from the Great Depression. After that, we didn't really get any, like, we had a crash here in 62, like a little mini crash. After that, though, like, look, you get long periods of time in between major corrections. You had a little mini correction here as well. But this is just the nature of things. Like, look, my point is, if we look back here, right, we already had this correction in 2022. We had this correction in 2022. If we go back to 2020, we had this correction here after 2020, which kind of parallels. It wasn't quite as big as 2008, but you kind of see it here for 2020. We got the big pullback, and then we got 2008 back here, which we rebounded pretty quickly. So I mean, in the last 15 years, we've had like 3 or 4 corrections or crashes, depending on how you define them. But they're not going to happen every day or every other day. I think people wildly overpredict crashes, and that blinds them to the nature of the market, which is that most of the time things are going up. Again, Nvidia and microchips are what's dragging the market up right now. And again, so the real question is going to be, how do those hold long term? If those correct big, again, we can get a major crash or correction if Nvidia and the other ones can't hold. Stocks only go up long term. Well, long term they do only go up. It depends on your definition of long term. But if you hold something for 20+ years, you're almost certain to be green, statistically speaking, in the market. Uh, 2022 wasn't necessarily large. It was small. How'd you go about getting your real estate license? I have ADHD and I'm kind of quirky in that way, so I get interested in a lot of different things. Years and years ago, long time ago, I don't know, I just decided I wanted to get my real estate license just for the heck of it, and so I ended up signing into an online. In Texas, I'm in Texas. I ended up doing the online course, and I ended up getting my real estate license very quickly. I remember I took the course. It was like $1,000. I took the course, passed the tests, did all that stuff in like a week. I took the required coursework for my real estate license. Did it in like a week. Scheduled my real estate license exam, my licensing exam. I went and took it, passed it, and then got my license within a couple weeks of deciding I wanted to get it. I'm not sure if the rest of the world is like that, but a real estate license is pretty easy to get. You just got to, I'm a good test taker. A lot of people are not able to pass the real estate exam the first time they take it. But I passed it and got it very quickly. But again, the rest of the world might be different. Texas is pretty easy to get. Stock market is going up fast in the last 7 months, not really healthy. Well, it depends on what you define as healthy, Don. Like, you got to understand, technology, the stock market is based off of technology evolution. So when we have a really big technology growth like AI, the market's going to go up really quickly. You know, those are the times you make money in the market, is when we have that growth in AI and tech, right? That's the big money to be made. And then we kind of stagnate for a little while, and then we'll have another technology or growth or thing that rips up higher. We've seen a lot of booms and busts over the last 30 years. We got the internet, you know, we got cannabis stocks, you get AI, you get EV cars and all the different stuff shooting up. So there's a lot of, you know, technology evolution, and that's what's influencing short-term gains in the stock market. Outside of that, though, I guess the biggest misconception is you can't always look at stocks breaking highs as a bad thing. It's not always extended either. Now, at the same time, like, I try to be balanced here. I'm not really buying up anything right now. I'm holding some things, but I'm not really adding to my portfolios right now. I'm kind of taking profit because things are up just a lot. I'm not really super confident to continue buying things right now. You know, I'm more of the type that I look for big pullbacks to buy up things instead of buying it around highs. So, you know. Yeah, Apple's still moving, man. Wow. Apple up to Apple is really, I thought Nvidia was helping the market run, but really it's Apple. Apple up to 215s. Look at this. Again, I'm in Apple right now. It's definitely helping my portfolio today too. So CPI might be right beneath me, AI. So we might have CPI right here in big letters. Could be, possibly there. It might be there. I'm a real estate license. I took both test state and federal and passed state and failed the federal. So I went back to Fed and passed the second time. Yeah. Yeah, I have a really good memory. Top 3 memories in the world right now. But no, just in how I am, my memory. I have a good memory. You know, I'm a good test taker in general. But again, I'm weak in some areas. My problem is I rush through things. You know, I rush through things very, like, even my jiu-jitsu coach gets mad at me because I'm rushing when I do everything. Meta's not really down that much. Amazon's kind of flat on the day. Amazon's technically green on the day. Meta's still technically green on the day. Nvidia's pulling back though, so maybe we'll see some corrections here. Yeah. I don't know. You get a lot of people that say they're ADHD when they're not. I see everybody's claiming to be ADHD now. I don't even know if ADHD is a real thing or it's just some people have just different personalities. But yeah, I don't know. I think people could just be different, and I don't know. I think I get hyper focused on things that I'm interested in, and if I'm not interested in it, it's very hard to get me to focus on it. You know, they've come out and said that ADHD is now. People used to think it was ADD and then ADHD, and so you could have one or the other. Now most people are agreeing that it's almost always people that actually have it. You got some people that just have a hard time paying attention. That's not ADD. Sometimes it has to do with they're just consuming too much technology, too much social media, stuff like that. Like that can condition your brain in a negative way. But people with ADHD or people that have true ADD are usually hyperactive as well. So they usually have ADHD, which is a different thing, you know, than just kind of struggling to pay attention. It usually stems from like hyper focus, obsessions over different things, hyperactivity, pacing. And that's what I have, you know. It's kind of a blessing and a curse though. Like I can hyper focus on things I'm interested in. That's why I created this YouTube channel years ago. Is because I hyper focused onto the stock market after watching the movie The Big Short. And so it can be useful, but it's also kind of a pain, and yeah. Some people would argue there's no such thing as ADD or ADHD in general. Maybe they're true, I don't know. Okay, so we got a scammer here. Got you. Yeah, sorry. If you try to scam people, the American show guy, you're gonna get banned here, dude. Telling people you're gonna send them $1 million something. Like, no, not today, sir. Yeah, I could never do ADHD meds. The problem is that news is Fed rate unchanged. Will market take it positive or negative? Nobody knows. I don't know if the market's going to go up, down, sideways from a pause. Nobody does, you know. Sorry, I was talking to somebody else. So you ever need an agent in Massachusetts? Yeah, thanks, brother. Oh yeah, I can't really get on ADHD. I've tried ADHD medication. You know, like some people take it and they're hyper and they're hyperactive and they're moving around and doing all these things and they're cleaning and they're working. I take it, I sit on the couch, bro, and just kind of zone into whatever I'm watching. I just kind of sit there. I don't move. I don't like moving when I'm on it. I don't like it at all. I never enjoyed taking it. I like my food and I like my sleep too much to take ADHD medication. I'd rather just let my brain be how it normally is and, you know, not get too addicted to any substance like that. That just doesn't seem like fun to me. Yeah. Is it healthy? Is it healthy for Apple to run this much? I mean, define healthy. Powell talks today at 2 p.m. or 2:30 p.m. Eastern Standard Time. Can you explain Apex? So Apex, it's a challenge, right? They're gonna give you a demo. They're gonna test your skill with a demo account first, and if you pass the test with a demo account, they fund you the same amount, right? They have packages from 25K all the way up to 300K, and if you pass the challenge, they fund you the same amount as the demo with a 90% split. So for the time being, you can get the 250K challenge. It's like $48 right now. It's like $50 basically for the 250K challenge. So if you pass that, you get 250K in funding with a 90% split. If you lose, you're out $50. Right? So it's not the end of the world if you lose it, but if you pass it, you get a ton of funding. And it's just a great way to learn how to day trade. Again, I always tell people the truth, which is that most day traders lose money. And that's probably the same with this. You're probably going to lose. Most day traders lose, right? I'm not avoiding that. That's the truth. But it's a lot cheaper to lose on Apex than it is to put 5K up and lose that. And I think that's the value of this. It allows day traders to get started for a cheaper amount, where they're risking less in the beginning. They're learning how to trade under pressure. And that's what trading is about, is learning how to trade under pressure. Not everybody can do it. A lot of traders end up putting up thousands of dollars, you know, and losing thousands of dollars as their first account. I know I personally did. I know a lot of people have as well. So, you know, just be careful. It's what I always tell people. But again, they're a sponsor of mine. I'm biased. They pay me money. So, of course, I'm biased in their favor because they pay me money. But if you want to check them out, there's the link. Yeah, I took one of those personality tests a few days ago. Here's my disclaimer. Remember, I am terrible. I have no idea what I'm talking about. Might be wildly wrong about everything I say. Don't copy me. Understand CFTC 4.41 hypothetical or simulated performance have limitations. GameStop's starting to pop up a little bit. Apple's starting to break highs too. Yeah, in the Myers-Briggs, I got the ENTP, the debater personality type, which is like a debate specialist. On the Big Five, I got I had low sensitivity, I think. Let me see. Yeah. The Big Five, I got a mix between extroversion and outgoing. I got low in agreeableness. I got medium to high in conscientiousness. Emotional stability, I got medium. And openness to experience, I got high. So, yeah, I'm not very agreeable, it says, which surprised me. You know, it talked about politeness, and it said I was low in politeness, low in agreeableness, high in experience, medium in emotional stability, and medium in extroversion, right? Which is interesting to me, because I always saw myself like I'm really introverted. So I don't know if I just answered the questions wrong or what. I don't like being around large groups of people. I'm kind of a homebody. I don't like, you know, I was always quiet, growing up, shy, like really shy, really quiet. You know, but I can be outgoing if I need to be. You know, I can play off like I'm enjoying myself, even though I'm not half the time. So, yeah, it said I'm low in sensitivity, low in agreeableness. Yeah. Yeah, I guess normal. News I got is Fed rates are unchanged. It's not good or bad. It's neutral. It's what's expected, Captain. That's what's widely expected is a neutral report today, a pause in rates, which is neutral. That's what they're expecting. What's going to matter more than that is going to be what Powell says during the press conference at 2:30. That's more important. Yeah, I see Oracle. Nice. I'm also extremely disagreeable. Yeah. I got the debater personality type, so I will look at the other side of the argument just to do it, and you know. But I think that helps my stock trading ability, because I think certain people get blinded by what they want to happen, or how they want things to be, and they get blinded in stocks. You know, like an example is like if you invest a bunch of money in a stock, and a lot of stuff comes out showing why that stock might not be a good investment. I think the healthy thing to do is to take a step back and look at your investment objectively and ask yourself whether that's good or not, whether you want to stay in it. But I think certain people end up buying big positions, and they end up like they're so desperate for it to go up that they ignore red flags about the positions, you know, so they end up just sitting and losing positions longer and losing money than identifying the risk and getting out. So maybe it helps my stock trading. Maybe I'm terrible at stock trading too. I don't know. All right, guys. You shy? Well, I'm shy-ish. Yeah. I mean, no, never mind. You'd be surprised at how shy I was when I was younger. I got a little bit better about it as I got older. I grew into myself a little bit, I guess. As a teenager, though, I was very quiet. Again, I never really had trouble with, like, you know, with girlfriends or anything like that. But I was very shy. I mean, I'm not gonna say what percentage I'm up. I'm up thousands on the year and on my TOS account on TD Ameritrade and my stocks. I'm up thousands, you know. But again, I'm not even claiming to be a good trader. I don't really want people to copy me. If Fed doesn't cut rates, Bitcoin dump. I mean, the Fed's almost certainly not going to cut rates. I mean, maybe, but it's super unlikely, I would say. It's just not very probable for a rate cut. I don't even know if there's even I don't even know if anybody's expecting that. You know. All right, so we're in this choppy behavior. I'm probably going to cut it down. Again, guys, remember, we do have the FOMC meeting later on today. So I'm going to take a break. We'll be back later for the Fed meeting, guys. So we will be back later for the Fed meeting. So yeah, be ready. We'll see you guys in a couple hours. Remember, we are going to stream live for the Fed meeting here. So we will be streaming live for the Fed meeting. Just be ready. Again, Fed meeting goes live in about what's right now? So the Fed meeting itself starts in about starts in about 4 hours and 23 minutes. So about 4.5 hours until the Fed meeting starts. Guys, so just be ready. I'll see you guys then. Y'all be good. We'll be back in a couple hours. Hit the subscribe button. Hit the notification bell. Listen, we're pushing towards 150,000 subscribers, so do it now. Hit the sub button. Hit the notification bell if you haven't already. I appreciate it. We'll be back in a couple hours later, guys. Y'all have a great day. See you guys in a couple hours.